Now today we are going to start a very important chapter of your syllabus, guys, and this chapter will hold bare minimum 10 to 12 marks in your examination. Bare minimum. There have been attempts where this chapter was asked for almost for 20 marks. Yes, 20 marks questions from this chapter, 25 marks question from this chapter. So this chapter is really an important chapter of your syllabus and absolutely uncompromisable. And the best part about this chapter is entirely practical. Entirely practical. There's nothing theoretical in this particular chapter. Even the theory portion that we are going to study, they will also churn into case studies. So case studies you have to solve. So those case studies will be really important, and this entire chapter will definitely set the fundamentals of cost audit really well, and the principles of cost audit and cost records really well. So a purely practical chapter, and some questions are mandatorily repeating from this particular chapter, like reconciliation statement. So profit reconciliation statement is a usual question which is asked from this particular chapter. Then value addition is asked from this particular chapter. Then case studies on the monetary thresholds are also asked from this particular chapter. So very important chapter from an exam standpoint, pure practical. Even if I am teaching something theoretical, that also has practical implications, that also has practical ramifications as far as this chapter is concerned. So please do this chapter really carefully and understand the concepts that I'll be teaching in this particular chapter. Understand all the nitty-gritties of this particular chapter, because yes, this chapter will definitely hold good percentage in your examination. Alright, so let's start our chapter, Companies Cost Records and Audit Rules 2014, which have been amended multiple times. Alright, so guys, in yesterday's class, this chart was left by me. I told you that I will discuss this chart in the next class. Yes, today is the class when we will first of all discuss this particular chart, and then we will move on to the cost record rules and cost audit rules. So now the first fundamental concept that I want to make you learn is that audit is useless without a backing supporting law. So I'll give you a simple example. Okay, you go to Reliance Industries Limited CMD, Mr. Mukesh Ambani, and tell him that, sir, we want to get your accounts audited. Please provide us your accounts. We want to audit them. You tell him that we want to audit your books of accounts. What will he say? What will he say? He will tell you, get out. Who are you? You will tell him, oh, we are CMA's cost and management accountants, rank holder, first attempt qualified in CMA intermediate and final, and I've got 80 plus marks in cost audit. I'm an expert cost auditor. Please give me your cost audit. He'll still say, get out. No businessman is willingly ready to undertake audits. And this is true for us as well. If someone tries to poke into our work, someone tries to analyze our work, or someone tries to check our work and, cull out some mistakes in our work, we won't like it. We will never like it. We won't do it wholeheartedly. So usually the businessman always will resist audit. Every businessman will resist audit. They will not undertake audit wholeheartedly. They will not undertake audit willingly. They will resist audit. Every businessman will resist audit. So now, what is the way that we can force any businessman to conduct audit? The only way is that we have to introduce mandatory provisions, statutory provisions in law regarding audit. So the simple equation is that if you don't get yourself audited, then your company will be locked out, then your business will be shut down by the Companies Act, and you will be prosecuted. So because of this fear, the company will get its audit done. So now I come back to my original statement that without any audit, without any backing law, audit is useless. There has to be a backing law. A backup law should be there, a law that backs up a particular audit. Only if there's a backing law, a backup law which supports your audit, only then will your audit succeed. Only then will your audit perform really well, and any company will be willing to get itself audited. So simple, we need to have a provision regarding our audit in the Companies Act. That is the crux of the matter. So what is that provision which is there in the Companies Act regarding cost audit? The provision is section 148, and yes, this is the mother section of our profession. This is the backbone of our profession. If this section is not there in the Companies Act, we cost accountants lose our shine. Our shine, our vibrance, our brightness is shining and is touching the sky because of this section in the Companies Act. So the growth and the prosperity which cost accountants have earned in market, the major credit goes to this particular section. One of the major reasons why we are shining so much, the credit goes to this particular section, section 148 of the Companies Act. So what does this section tells about costing? Yes guys, so this section first of all lays down the principles of maintaining cost records. So obviously if you don't maintain your cost records, then cost audit is not possible. So the first requirement that the section will tell you is to maintain your cost records, because unless until records are maintained, audit is not possible, right? So the first proviso, the first subsection will tell you to maintain cost records. Who is supposed to maintain cost records? And those who are supposed to maintain cost records, out of them, some of the people are required to get their cost audit done. So first requirement of cost records will be enunciated in this particular section, and then out of those people who are required to get their cost records prepared, out of them who will be required to get its cost audit done, these are the twin subsections which you are going to deal in today's class in great detail, guys, in great detail. So the two sections are 148 subsection 1 which tells you about cost records. Obviously financial records are already being prepared by the company. Now company will be reluctant to prepare cost records. No, what is the need of cost record? We don't want any cost records, but section 148.1 will mandatorily ask certain companies to prepare their cost records. Cost records are mandatory for certain class of companies. So let us see what are the basic principles in which we can see that yes, these are the benchmarks because of which cost records are required to be prepared by any company. So cost records means it is applicable for first of all, the meaning of cost records. Cost records means utilization of material, utilization of labor, and other item of cost should be listed down. And of course, all these things are listed down in our cost sheet. So it is nothing but a cost sheet and the supporting annexures and the supporting accounts. That is our cost records. In very simple layman words, cost records means cost sheet. Simple. Okay. Then it is applicable only for specified companies. Cost records is not mandatorily applicable on all the companies. It's only mandatory applicable on specified companies, but other companies can also prepare their cost records, can prepare their cost sheet voluntarily. There is no restriction in law to voluntarily prepare your cost records. So you can prepare your cost records voluntarily, no problem in that. So if you want to prepare your cost records voluntarily, Companies Act is more than happy. Companies Act is happy. You can prepare your cost records voluntarily, no problem in that at all. Okay. So specified companies are required to prepare their cost records, only specified companies, not all the companies, plus companies who are producing or providing specified goods or services. So there are two thresholds which have been listed by this particular subsection. Number one, you should be specified companies, which means you should fulfill the turnover based criteria which is given in this particular subsection. There's a turnover based criteria which is given in this particular subsection. So if you fulfill that turnover based criteria, then you are required to prepare your cost records, and plus you should be falling under the specified category of goods and services. Not every person who's fulfilling the turnover criteria becomes eligible for cost records. Only those people who are producing specified goods and services, they are eligible for cost records. Now guys, simple as it is, the statutory audit provision which are there in the Companies Act, they are applicable for all the companies. They are applicable for all the companies, irrespective of their goods and services which they produce, irrespective of their turnover. Statutory audit is applicable for all the companies. Tax audit is applicable for certain companies. Section 44AB, it enunciates the turnover limit above which the tax audit is required to be done, right? So there are different provisions for different audits. Similarly, we have specific provisions for cost audit as well. So only if you fulfill these two conditions, only then will you be mandatorily required to prepare cost records. So can we voluntarily prepare cost records? Answer is yes. Voluntarily, even if you don't meet these standards, then also you can prepare your cost records. No problem in that. The government is not stopping you from doing that. Please go ahead, prepare your cost records. It will be beneficial for you only. You will be able to analyze your cost really well. But mandatorily, the government has described only these companies which are required to prepare their cost records. So these are the companies which are required to prepare their cost records. These criteria, if these criteria are met. Okay, sir. Then the goods are specified in the category A and B. based on turnover criteria or net worth criteria. This is how cost records mandatorily are required to be prepared. Okay. Now, let me move on to the second subsection, which is cost audit. The first condition which you have to meet for cost audit is that you should mandatorily be falling in subsection 1, because if you do not fall in subsection 1 and you do not prepare your cost records, then cost audit is naturally not applicable on you, because what will be audit when you have not prepared your cost record? So the first and foremost condition of getting your cost audit done is that you should be eligible for subsection 1, preparation of cost records. These conditions should be met by you. So both these conditions should be met by you. That is the first condition of applicability of cost audit. And obviously guys, that's true. Unless and until you are required to prepare your cost records, how will you be expected to conduct your cost audit? Not expected, right? So the first condition is that companies which are covered under subsection 1, only those companies which are covered under subsection 1, that is preparation of cost records, only those companies are eligible for cost audit. So subsection 1 is cost records. So if you are eligible to prepare your cost records, only then will you be eligible to conduct your cost audit. Okay. Now plus means both the conditions should be cumulatively satisfied. Second condition is you should meet the turnover criteria which is prescribed by the rules. So yes, both the conditions are to be cumulatively satisfied. Number 1, you should be eligible for preparing your cost records. Number 2, you should be meeting the turnover criteria which is specified under the rules. If these two conditions are cumulatively satisfied, then guys, you are required to get your cost records audited by a cost accountant. Obviously, this authority is only given to cost accountant who has got a certificate of practice. Who is a practicing cost accountant? This authority is only given to a practicing cost accountant. So who is a cost auditor? We have already studied in yesterday's class. Cost accountant who is in practice, he is a cost auditor, plus who is appointed by the board of directors of the company to become a cost auditor. And financial auditor or statutory auditor cannot be the cost auditor of the same company. Self-review threat. Self-review threat. Okay, sir, got it. So this was the brief of section 148. This is the brief of section 148. Now let us delve into great detail of section 148. First subsection 1, then subsection 2. Let us delve into depth of section 148. Okay, let me open yesterday's notes as well, because yesterday's note will contain the section 148 language. Yes, these are yesterday's notes. Please open yesterday's notes also. Please open yesterday's notes also. All right. This is section 148. This is our mother section. This is the section that really gives us impetus in market. It clearly makes us stand out from the general crowd in market. This is the section. Section is section 148 of the Companies Act. So what is subsection 1? Okay, subsection 1 relates to cost records. Subsection 2 relates to cost audit. First, we are going to analyze subsection 1 and then we are going to analyze subsection 2. So, subsection 1. Notwithstanding anything contained in this chapter, oh wow, this is known as the non-obtained clause. This is the non-obtained clause, which means this clause overrides the entire chapter. This clause overrides the entire chapter. 148 subsection 1. Notwithstanding anything contained in this chapter, the central government may by an order, so central government may by an order in respect of such class of companies. So there are some class of companies in respect of which are engaged in production of such goods or providing such services. So two conditions are to be cumulatively satisfied. Number 1, you should belong to such class of companies. Such class of company means turnover criteria is required to be met. Okay. Plus you should prepare specified goods and services. Specified goods and services is given in table A and table B of the rules. As may be prescribed, direct that particulars relating to utilization of material, labor and other item of cost as may be prescribed shall also be included in the books of accounts. So your cost sheet should also be included in the books of accounts. That is the guidance mandatory requirement which is given under section 148(1). Two conditions are to be met. Number one, you should belong to such class of companies, which means you should meet the turnover criteria, and you should be engaged in production of such goods, specified goods and services which are given in table A and B. If you meet both the conditions, if you satisfy both the conditions, then you are required to prepare your cost sheet included in the books of accounts. Then you are required to prepare your cost records, which is necessary the cost sheet. So the criteria, what is the prescription? Who has given this prescription? Where is the criteria given? Guys, this criteria, this prescription, that was the turnover. What is the goods? This is given in the rules. This is given in the rules 2014. Section has directed you to the rules. Now we will see the rules. What is it which is given in the rules? Now we will see the rules. Alright, sir, let's see the rules. So we are going to see rule number 3, which is application of cost records. And this is corresponding to section 148(1) of the Companies Act. This is corresponding to section 148(1) of the Companies Act. This section is corresponding to section 148(1) of the Companies Act, which is application of cost records. Where will the cost records be applicable? Who all are required to prepare their cost records? How will you prepare your cost records? All the things will be given in this particular rule. So guys, please tell me whether cost audit will also be given in this particular rule, rule 3. Whether cost audit will also be given, the rules of cost audit be also given in this particular rule. Yes or no, please, in the chat box. Will the cost audit, provisions of cost audit be also given in the rules? In rule 3? In the chat box, please tell me. Provisions of cost audit, will they also be given in the rule 3? Please comment in the comment section. No, very good answer. No, correct. This rule is only dedicated to cost records. Very good. Answer is no. Perfect answer. No, 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 no. Very good answer. This rule is only related to cost records. So rule 1 is title of the rules. Rule 2 are the definitions of the rules. Rule 3 is the application of cost records. Rule 4 is the application of cost audit. Rule 5 is how to maintain cost records. Rule 6 is how to get cost audit done. This is the brief snapshot of all the rules that we are going to discuss today in our session. Okay, sir, got it. All right, now let us come on to the rule, and very, very important rule from an exam standpoint. Please write, very, very important. And yes, you have to learn the rule number. Some students will ask me, sir, do we have to learn the rule number? Absolutely, yes. You have to learn the rule number. You have to learn the rule number. Rule number is to be learned by you. Rule number 3, rule number 4. You have to learn the rule. Okay, sir, got it. Okay. Okay, let's read the rule. Any company. Rule starts by saying any company, including a foreign company, even if it's a foreign company which is working in India. There's a company who's working in India in its foreign name itself, like a liaison office, like a branch office, like a project office, and it is working in India, including a foreign company, engaged in production of goods or providing services. A company who is engaged in either production of goods or providing services specified in the tables below. Oh, so only those companies who are producing these products and who are providing these services, they are only applicable for cost records. Okay, specified in tables below shall be required to prepare cost records for such products or services in their books of accounts. Now the cost records are required to be prepared only for such products and such services. Cost records are required to be prepared only for such products or such services. I'll give you a very small example. Okay, there is a company XYZ Limited. It is producing product A, product X, product Y, product Z. It is producing 3 products, product X, product Y, product Z. Okay, product X is classified under tables, okay? Product X and Y are specified under the tables. Product X and Y are specified under the tables. And product Z is not specified under the table. Okay. So product Z is a not specified good, and product X and product Y are specified goods which are being prepared by XYZ Limited. Now my question to you is, assuming that their threshold limit is met, please tell me in the chat box, cost records are required to be prepared of which all products? Cost records are required to be prepared of which all products? Option number 1, all the products. Option number 2, product X and Y. Option number 3, product X and Z. Option number 4, product Y and Z. You have to tell me the cost records are required to be prepared. You need to tell me cost records are required to be prepared. Suppose threshold limit is met. Cost records are required to be prepared of what all products as per rule 3. Let me reiterate the rule 3, okay? Shall be required to prepare the cost records for such products or services in their books of accounts. Now you need to tell me, after reading rule 3, as per rule 3, which all products should cost audit be prepared for? Which all products? Very good answer. Very good answer, guys. Very good answer. Cost records are required to be prepared only for the specified goods, not for all the goods. First and foremost conclusion that we need to understand over here. Because the rule itself says the cost records are required to be prepared for such products. Such products means specified products under the tables, table A or table B, whatever. So cost records are required to be prepared only for such products which are specified under table A and B respectively. Cost records are not required to be prepared for the products which are not specified under any of the table. Cost records are not required to be prepared for product Z. This is the conclusion which you need to really understand. Very thin point of difference, okay? But it will make a big impact on your answer in the examination, because this analysis will fail if you are not able to understand that not specified goods, the cost records are not required to be prepared. Now you tell me, I have not even taught you rule 4, which is cost audit. I have not even taught you, but you tell me whether cost audit is possible for this product or not. Product Z, whether cost audit is possible or not, assuming threshold limit is met. Whether cost audit is possible for product Z or not, assuming threshold limit is met, you tell me in the chat box. I have not made you understand the rule 4 as of now, but I want your answer regarding cost audit right now. You need to tell me whether cost audit is possible for product Z or not. Okay, Rutuja says no. Any other answer? Any other answer? Any other answer? Nageshwar Rao Divile says yes. Yes, 100% possible if they have cost records. No. I'm talking only about product Z. Whether product Z will be eligible for cost audit or not. I'm only talking about product Z. I'm not talking about product X and Y. Please note my question. Please rehear my question. Whether product Z will be eligible for cost audit or not, that's my question. Product Z, correct answer, guys, no. Product Z cannot be covered under cost audit. Why? Because cost records are not required to be prepared for product Z. When cost records are not prepared, then a question of cost audit does not arise. It is impossible to do cost audit if cost records are not prepared. And in this question, since only X and Y are specified, cost records are specified for X and Y only. So for Z, there are no cost records which are required to be prepared. Hence, Z will not be eligible to cost audit. Hence, Z will not be eligible to cost audit. Now my next question is, please listen to my next question and answer the question. Next question is, assume product Z cost records are prepared. Product Z cost records are prepared voluntarily. Assume that product Z cost records are prepared voluntarily. Voluntarily you prepare the cost records for product Z voluntarily. Then will cost audit be applicable or not? There is no mandatory requirement as per law. There is no mandatory requirement. But they produce their cost records voluntarily. They say that okay, we want our cost records. They produce product Z, for product Z also they produce the cost records. So they prepare the cost records voluntarily. Now tell me whether cost audit is applicable or not. Your earlier answer was no. Now what is your answer? Even the students who have joined through app, I can see you, but I cannot see your answers. You are not answering anything, huh? Please answer, students who have joined through app. Okay, some students are saying yes, some students are saying no. Not required as per law, but yes, if wants voluntarily. No. In audit, there is no voluntary. Correct. Still the answer is no. Still the answer is no. Even if they prepare cost records voluntarily, even then cost audit is not required to be done. Why? Because let us come to our mother section and let's read our mother section once again. Mother section says that the company must be covered under subsection 1. For conducting cost audit, the company must be covered under subsection 1. So subsection 1 should be mandatorily applicable on that particular company. Only then cost audit is applicable. Otherwise, cost audit is not applicable. And in this case, product Z, on product Z, subsection 1 was not applicable. Even if they did voluntarily, cost audit is not required to be prepared. They will not get their cost audit done. They will not get their cost audit done. There's no voluntary, voluntarily no one gets their cost audit done. So voluntarily cost audit cannot be done. Okay. Voluntarily cost audit cannot be done. So cost audit is not required to be done for product Z. For product Z, cost audit is not required to be done. Okay, sir. Okay, let me come back to our section. Oh, sorry, the rule 3. Okay, so this is the rule 3. This is the rule 3. This is the monetary threshold of rule 3. Now we have already understood that. You know what is the rule 3? Text of rule 3 we have already read. Now this is the chart of rule 3. A very, very useful chart where you can actually revise the entire rule 3 in a very short span of time. Okay, it says any company including a foreign company plus, which means all the conditions should be cumulatively satisfied. Engage in production of specified goods and services, which means specified under table A and B. Plus means the threshold limit of turnover. The threshold limit of turnover should also be met. Is equal to cost records required to be prepared for the specified product or services only. Only the specified goods and services are required to prepare their cost records. Not all the goods, not all the services, but only specified goods and services. For only specified goods and services, cost records are required to be prepared. Okay. Then what do you mean by cost records? What is the meaning of cost record? Cost records means utilization of material, utilization of labor and other item of cost. Necessarily cost sheet. This is nothing but cost sheet. So all three conditions should be cumulatively satisfied. Okay, sir. So we understood any company, we understood engagement in production of specified goods and services. We understood meeting the threshold and therefore cost records will be applicable. Now, sir, let us go deeper into each of these parameters. Let us go a little more into deep of these parameters. Number 1, any company. Okay. So we are not bothered what kind of company are you. Any company, be it a small company, large company or any company which is registered under the Companies Act, including a foreign company. Foreign companies are generally not registered under the Companies Act. They work in India using their branches, using their project office, using their liaison office. So those are also included in our purview. Okay. Then they should be engaged in production of specified goods or services. So what should they prepare? What should they make? They should make any product or service? No. Specified goods and services. So guys, very simple logic is that, we want to get cost audit done, or we want to get the cost records prepared by companies whose costing mechanism is little complex. There are a lot of mechanical procedures, there are a lot of complexities in their costing mechanism. Therefore, we need to analyze their cost in great detail. Or they are so basic to the Indian economy, some basic things which are available to Indian economy, that we need to understand their costing structure so that we ascertain this fact that they are not overcharging. Their profitability percentage should not be huge. So any of the purpose, but we have not included under a cost audit all the products. We have only included specified goods and services. And these specified goods and services are given in table A and B of the rules. In the rules, table A and B is given, and in that these specified goods and services are given. So first of all, we have table A, which is category A. Category A goods contain the regulated goods. Regulated goods means these goods are regulated by some law. There is an act which regulates these goods. Generation and transmission of these goods are regulated by some act. For example, electricity. You and me cannot generate electricity. It has to be strictly governed by the Electricity Act. Insurance. You and me cannot give insurance. It has to be strictly regulated by the IRDA. Then many other industries which are strictly regulated. Petroleum industry, strictly regulated industry. Okay. So this is known as regulated industry. So not all the regulated industry are under this purview. Only 6 regulated industry are under purview of cost records. Only 6 regulated industry are under purview of cost records. There are many other regulated industries, like insurance being one of them, but that is out of scope of cost records as of now. But obviously guys, as we move forward, we can see increase in the list of these cost records. Industries which will be applicable under cost records, we'll see an increase in the list, obviously, as we move forward. Obviously, we want many companies to get covered under the cost records and cost audit. Obviously, we want expansion of our profession. So we would like to see more companies being included in this list. But as of now, only these 6 companies are included in the regulated sector. What are these 6 companies? Telecommunication services. You use telephone, mobile phones, SMS, WhatsApp, all the kind of social media apps. So telecommunication services, it includes transmission, reception of signs, signals, writing, images, sounds, or intelligence of any nature, and any broadcasting services regulated by the TRAI, Telecommunication Regulatory Authority of India. Generation, transmission, distribution, and supply of electricity. This is again covered under the regulated sector, subject to cost audit. Okay, and 4 things are included over here, guys. 4 things. Okay, very important. 4 things are included over here. What are these 4 things? Number 1, generation. When you produce electricity, that is generation. Then you have transmission. So the electricity which is generated, it is generated at a very high voltage. You have to equalize the voltage of that particular electricity before giving it to household. Okay, so this is known as transmission. So typically the person who generates electricity, he also transmits the electricity into a lower voltages. Then we have distribution. You have got distribution panels, you have got grids. These are distributed using grids. We have grids, like we have Power Grid Corporation, right? PGCIL. So there are grids which actually transfers the electricity from places where they are generated to suburbs, to our house, not to our house, but to the state where our house is. So they distribute the electricity. And finally, supply. Supply means in Delhi, the electricity is coming from Himachal, and when Delhi household, the electricity is being supplied, that is known as supply. So there are 4 activities which I include over here: generation, transmission, distribution, supply. So strictly speaking, generation and transmission is production of electricity. It is a good. It is where the electricity is being produced. Okay, this is manufacture. And distribution and supply is actually service, providing of service. So generation and transmission is manufacture of electricity, which means electricity is being produced, and supply and distribution is supply of services of electricity. And both are covered under, all the 4 are covered under the cost records purview, cost audit purview. All 4 are covered under this purview. Again, it is regulated by the relevant regulatory authority, which is Electricity Act. Petroleum products are there. Petroleum and Natural Gas Regulatory Board always, regulates this petroleum products. Cost records is applicable on this. Drug and pharmaceuticals, fertilizers, sugar and industrial alcohol. Again, covered under the regulated sector of the rules. Then we come on to the unregulated sector and category B sector. This is unregulated sector. It contains 33 sectors. 33 kind of companies are not companies, but sectors are included in this particular category. 33. This is unregulated sector. It is not governed by any law, any act or something is not governing this particular sector. But this is little more liberal sector. There is no restriction by Government of India in this sector. Very less restrictions are there. Almost no restriction are there in this particular sector. So this is an unregulated sector. This includes 33 industries, machinery and mechanical appliances used in defense, space, atomic energy sectors, excluding any ancillary items or items. So machinery and mechanical appliances used in defense, space and atomic energy. So there are some B2B products which are being manufactured and supplied to defense, atomic energy, space, etc., which are included in this particular industry, but they exclude the ancillary items. If they are very small items which are just ancillary to this particular industry, they are excluded. And guys, in the examination you will be specifically given that this is the ancillary item, this is the main item. It will be specifically given in the examination. But you just need to remember, ancillary item is not included in this category. Any ancillary which is linked to machine or machine related items, it is not included in this category. Very important inclusions: any company which engaged in any item or items supplied exclusively for use under this clause shall be deemed to be covered under these rules. Now this is an important inclusion which has been included in the rules, which says that if there is any company, machine, mechanical appliances used for defense, space, atomic energy, if there is any company which is engaged in any item or items supplied exclusively for use under this clause. So I'll tell you a very simple example. There is a company XYZ. It produces some products which it supplies to defense. There's a company XYZ. It produces some equipments or machinery or mechanical appliances which is supplied to defense, not the arms, ammunition, no, some mechanical stuff, some machinery. It supplies to defense. Now XYZ requires some products which it has outsourced to ABC, and ABC exclusively supplies those products to XYZ only. ABC doesn't provide those products to anyone else in market, because that are specialized products which are used for defense procurement also. So obviously XYZ is covered under the rules for sure, no doubt about it. Even ABC is also covered under the rules. This is the inclusion. This inclusion is for ABC, which exclusively supplies the goods which are related to these goods. So ABC supplies exclusively those goods which are related to the main goods. Please read the inclusion once more. Any company which is engaged in any item or items is supplied exclusively for use under this clause, then it shall also be covered under the rules. So guys, technically ABC is not supplying to defense. ABC is not supplying to defense. But ABC is supplying something which is exclusively used for defense purposes. So ABC will also be covered under this clause. That is the inclusion. Okay, sir, got it. Then turbojets, turbopropellers, arms, ammunition, explosives, propellant powders, prepared explosives other than propellant powders, safety fuses, detonating fuses, percussion, detonating caps, igniter, electric detonator. So guys, you need not know the meaning of each and every word which is listed over here. It is practically impossible to know meaning of each and every word. I tried and I failed. So don't remember the meaning of each and every word. Just remember the words. Just remember the words. If you read this entire list 3 times, you'll remember the words. And the idea is just to remember the words. Just remember the words, nothing else. Okay, because it's difficult to understand the meaning of the words. Okay. Radar apparatus. Radar apparatus. Radio navigational aid apparatus. Radio remote control apparatus. Tanks and other armored fighting vehicles, motorized whether or not fitted with weapons, and part of such vehicles that are funded, investment and made in the company to the extent of 90% or more by government or government agencies. So any kind of tank, armored vehicles, motorized vehicles which are fitted with weapon, 90% of the holding of that company should be held by Government of India. Then we have port services, important guys, important services. If anyone is providing port services, so what are the services which are provided at port? Loading, unloading. So on the port, your material is loaded. Now we want someone to pick up that material and put it in the customs warehouse or put it out of the customs warehouse. So stevedoring charges, loading, unloading charges, pilotage, hauling, mooring, remooring, hooking, measuring, loading, unloading, services rendered for a port in relation to a vessel or goods regulated by the tariff authority. So very special thing to be noted over here is any services provided for a port. So a port is requiring some services of a crane. You provide that service of a crane to a port so that port can pick up the vessels and shift it to the port. Port authorities need that kind of a service. Again, that is covered under these rules. So services rendered for a port. Then aeronautical services of air traffic management, aircraft operation, ground safety services, ground handling, cargo facility, supplying of fuel rendered at the airport, any kind of aeronautical services are included in this particular category. Even supplying of fuel, supplying of ground handling, you've seen your bags are being checked in, checked out, putting in the belt, etc, etc. All these things are included in point number 8, aeronautical services. Fueling services at the airports. Exclusion, all the airports and aircrafts operations belonging or subject to control of armed forces or paramilitary forces are excluded. So you've got some small airports which are army airports. They are not commercial airports, they are army airports. Like in Delhi, you have an airport by the name of Safdarjung Airport. That's not a commercial airport, it's an army airport. Only army can use that airport. Services which are provided in those airports which are used by armed forces, they are not subject to cost audit and cost records. No, they are not subject to cost records. This is the exclusion. Iron and steel, road and other infrastructure projects, very important. Any kind of road projects or infrastructure projects, it covers road, national highway, state highway, major district roads, other district road, village roads, including tolls, bridges, highways, road transport providers, and other road related services. Hence, every activity included in construction and maintenance of our projects are covered under these rules. So if you are engaged in construction and maintenance of any of these things, then you are covered under the cost record rules. Rubber and allied products, if you are producing rubber and some products which are related to rubber, coffee and tea included, railway or tramway locomotives, rolling stone, railway or tram fixtures, fittings, mechanical, so any kind of fittings which are used in railway, like a railway track, rolling stock of railway, locomotives, manufacturing of the wagons, the railway wagons, any kind of tramway fixture, anything is included in cost records. Cement is included in cost records. Ores and mineral products, any kind of mineral production, extraction, which is mining sector actually. You are into mining sector. You call out minerals from the earth. That's included in this particular rules. Mineral fuels other than petroleum, mineral oils, etc. Base metal, inorganic chemical, organic, inorganic compound of precious metal, rare earth metal, radioactive elements, isotopes, organic chemicals, etc. Jute and jute products. Now you will wonder, sir, jute and jute product is such a simple industry. Why do you want to prepare cost records for jute and jute products? It's not a complicated industry at all. Guys, government want to monitor its profitability. What is the profitability which is there in this sector? And whether the cost is being disclosed to Government of India appropriately or not. Because government gives huge incentive to this sector. This sector receives subsidies, very high subsidies. Okay. So when it includes giving high subsidies to this sector, so obviously we need to know whether they are earning well or not. If they are earning well, we'll withdraw the subsidies, guys. We will not give the subsidies if they are earning well. So we need to know what is their cost, what is the profit, so that their subsidies can be regulated and reduced. So for that purpose, we need cost records for jute and jute products. Someone is asking whether tea dust will be included. Yes, tea dust will also be included. इतना याद नहीं होगा, याद करना भी नहीं है. You don't have to remember it. Just read this list 3 times before the examination. Just read this list 3 times and that's it. You need not mug this entire list. Simple. Okay, sir, got it. Then we have edible oil, any kind of edible oil which is being produced, which is being generated, and edible oil can be the almond oil or the olive oil or parachute or the coconut oil or the mustard oil, any kind of edible oil, it is covered under this particular category. Then we have construction industry. Okay, so isn't it a repetition? No, it is not a repetition, guys. In this only road and related infrastructure was included. Para number 10, road and related infrastructure was included. In this construction industry, everything else is included. Everything else is included. So this has got much higher scope. Construction industry, it covers industrial, commercial and social development and maintenance, real estate development, including an industrial park or preparing special economic zones. Contractors as well as subcontractors are included in this particular. So this is a much wider list. Much wider list. It's much wider in scope. So this list is quite wide as compared to para number 10. Para number 10 was limited to the road infrastructure, the highway infrastructure or infrastructure which are related to the basic infrastructure of the country. Construction industry. Then we have the health services, and yes, all my female students, all my girl students will be happy after reading this particular clause because it has got a beautiful exemption for all the girls out here. Health services, namely functioning and running of hospitals, diagnostic centers, clinical centers or test laboratories. So everything is included over here. Diagnosis, testing and clinical, the treatment, all things are included over here. Exclusions. Companies running hospitals exclusively for its own employees, provided if such hospitals are not providing health services to outsiders, they are excluded. So if you have a hospital, but the idea is that you need to use that hospital only for benefit of your employees. You are prepared that hospital for your employees, for benefit of your employees only. So guys, sometimes what happens is that industries are laid down at remote places like exteriors. Extreme exteriors, the companies are laid down. Over there is no health facility. When there's no health facility, then it's necessary to provide health facility to the employees. Therefore, these companies have their own, they have their own hospitals. So if the hospital is not for a commercial purpose, if the hospital is not for a purpose of only commercial things and to earn money, the objective is not that, and only for employees, then you need not prepare cost records and cost audit for this particular hospital. That is the exclusion number 1. Exclusion number 2, companies engaged in running beauty parlors and beauty treatments. Wow, what an exemption. Companies which are running beauty parlors and beauty treatments, they are exempt from this particular category. I'm very sure while the ministry was drafting these rules, there has to be some female some female member would have been in the committee to have included this kind of an exclusion. For sure it would be there, huh? So all your VLCC, Batra's clinic and the cosmetic surgery and the all the allied industries are excluded from cost audit. Cost records are not required to be prepared. Cost audit is not required to be prepared for any kind of beauty parlors or any kind of beauty treatments. Cost records are not required to be prepared. So yes, happy? All the students, the girl students are happy by this exclusion? Please tell me in the chat box. Students are live on app also, but they are not interacting on live or on app, guys. Guys, the fun of having a live session is interaction. Unless and until we have interaction, the fun of live session is not there. And guys, I sincerely request all of you to at least like the session, huh? Drop in a heart, drop in a thumbs up for the session. That will really help boost the video's credibility, and YouTube is then going to really inform everyone about this particular video. ये हमारे साथ नाइंसाफी हुई है. So boys are saying that this is a partiality for boys because boys have not been given any exemption, but girls are given exemption. So I'll tell you what, huh? Today even boys are entering into beauty treatments and beauty parlors a lot. Even boys want manicure, pedicure and whatnot. All the boys want all these things also. So it's a benefit of our boys also. Okay, don't say like this. कुछ फर्क नहीं पड़ता. Okay, got it. All right, so health services are excluded. Health services are included in cost records, but specified things. Point number 1, point number 2 are excluded from your health services. Point number 1, point number 2 are not included in the health services. Then we have education sector, which again is included in the cost records, like imparting training, education by means of any mode. Okay, so even coaching institutes are categorized under this particular cost records and cost audit rules, because it says any mode, by any mode you can provide education, even school, colleges, they are all included in this particular category. For any mode, this particular clause can be used. Even coaching institutes, even online coaching institutes, even online courses like Udemy or Unacademy, or any kind of online coaching, that is also included in this particular category. So education services like important training or education by means of any mode. Exclusions, auxiliary services. Auxiliary means secondary services like food, like conveyance, secondary services. Secondary services provided by companies as a separate independent entity to the education institute, like transportation of students, faculty, staff, catering services including midday meal scheme, security or cleaning or housekeeping services in such education institution, services relating to admission to such institution and conducting of exams are outside the purview of cost audit and cost records. So cost records are focused only to educational services, which means providing of education. If the school charges for anything else, like if the school charges for admission fees or conduct of examination fees or transportation or food, that is not eligible for cost audit and cost records. Cost records are not required to be maintained for that particular thing. It should be maintained only and only for the education services. Education services included in cost records. And number two, the second, the exclusion is services falling under philanthropy, any kind of charitable, service, any kind of charity, any kind of philanthropy which is being done, that charitable purpose. If you are educating someone for charitable purpose, then it doesn't form part of your, cost records and cost audit. Cost records will not be applicable. Like as many companies these days send their employees to government schools and underprivileged students to teach India project, and some companies as a part of their philanthropic pursuit also do this kind of an endeavor. So that is not included in our cost audit and cost record. Services falling under philanthropy, charity, or as part of social spend which do not form part of any business. Then milk powder, insecticides, plastics and polymers, tires and tubes, pulp and paper, all these are included in cost records. Textiles, glass, other machinery, electricals or electronic machinery, and last is production, import and supply, trading of medical devices. Now guys, before coming on to point number 33, point number 33 is really critical. Point number 33 is really critical. And there's one anomaly which is given in point number 3, which I'm going to highlight now. So for highlighting that anomaly, let me come on to the start of this particular rule. Starting of this particular rule. All right. So the basic fundamental of this rule is that any company which is engaged in production of goods and services, which is engaged in, the word used is production of goods and services. Any company which is engaged in production of goods and services. So if you read the first line, then it is apparent that trading is not included. Trading is not included. It is apparent that trading is not included. If you just see the first line, it gives a feel that trading is not included. And now let me read section 148.1 also. Let's read section 148.1. Even when you read section 148.1, notwithstanding anything contained in chapter, central government by order in respect of such class of company engaged in production of such goods or providing such services. Again, trading is not included over here. Apparently, trading is not included over here. Okay, trading is not included over here. Even in the section, trading is not included. Even in the rule, trading is not included. But the anomaly is, the problem is, the lacuna is, the confusion is that, sir, in point number 33, they have stated production, import and supply or trading of medical devices. Oh, sir, this is a anomaly. This is a confusion. This is a strict violation of the act, of the provisions of the act. This is a contradictory statement. Section says only production is eligible for cost audit and cost records. Rule says only production is eligible for cost audit and cost records. And the table says even trading is included in the category of cost records and cost audit. So the logic which all the cost accountants give for this anomaly is that even trading falls under the category of service. Trading means you are providing service of selling of goods and all the goods which are there. So it's a service. It's not production of a good, but it's a service. So it is very much included in the category. There's no anomaly, there's no contradiction. This is what logic is given to us by all the cost accountants who wants trading also to be part of cost audit and cost records. And of course, we want to expand our scope. So we want everything under sun to come under cost records and cost audit. So we say, no, there's no anomaly, there's no contradiction, no. Trading means services, and services written in section also, services written in rule also. So no problem in that. Services trading is also included in cost records and cost audit. This is the logic which is given by all the cost accountants. And guys, we as students need no logic. Okay, this is just for your knowledge. For us, trading is also included for these category of goods. Only these category of goods, not all the goods, but only these category of goods. The trading is also included. So trading of medical devices like cardiac stents, drug-eluting stents, heart valves, catheters, pacemakers, intraocular lens, bone cements, orthopedic implants, internal prosthetic replacements, scalp vein set, deep brain stimulators, ventricular peripheral shunt, spinal implants, automatic impalpable cardiac defibrillators, patent ductus, arteriosus, atrial septal defect, ventricular septal defect closure device, cardiac resynchronized therapy, urethra, spinacture device, and I am really not able to pronounce others, guys. I am very sorry. You need not pronounce all these. You need not remember all these spellings. Okay. Now you tell sir, should we remember all these spelling? Sure. If we have to remember such spellings, sir, we should have taken biology in our 11th, 12th. Why we chuck biology? Because we cannot deal with such complex words. That's why we chuck biology, sir. And now you are making us remember all these. No, I'm not making you remember all these. Just read them thrice, that's it. Don't learn them. Read them thrice, that's it. Before the examination, just read them. That, even trading of these devices is permissible and cost records is applicable on these services, even if they are being traded. Okay. So, import and supply or trading of such medical devices is also categorized under cost audit and cost records, because we want to monitor this sector. The sector is a critical sector. We want to monitor it. So even if you do trading of this sector, you want to ensure that you are not adding too much of profit and inflating the price. We want to ensure that. So if you are in this sector, even trading is covered under the cost audit and cost records purview. Even if you are just trading in these equipments, these parts. Okay, sir, got it. All right. So these are the specified goods and services which trigger our rule number 3. Rule number 3 is triggered by these goods and services. Rule number 3 is triggered by these goods and services. All right, sir. And now we come on to the monetary threshold. So what is the monetary threshold of getting this cost records done? The monetary threshold of getting this cost record done is 35 crores. The overall turnover of the company should be more than or equal to 35 crores. Overall turnover of the company should be more than equal to 35 crores. Only then your cost records is triggered. Overall turnover of the entire company. Overall turnover of the entire company should be 35 crores or more. Only then the cost records requirement is triggered. Sir, it is saying aggregate turnover of the entire company, which means the products which are not included in the cost audit and cost records, even their turnover is to be added. Yes, their turnover is also to be added. Products which are not covered under cost records and cost audit, even their turnover is to be added. Yes, absolutely. So suppose, I'll give you an example. There are three products which are being supplied by a particular company. Product X, product Y and product Z. Product X, 15 crores. Product Y, 12 crores. Product Z, 10 crores. Okay. Product X is table A. Product Y is table B. And product Z is non-specified. Product Z is non-specified. Now you have to tell me in the chat box. You have to answer my two questions. Question number 1, whether cost records are applicable or not. Question number 1, whether cost records are applicable or not. Question number 2, if yes, on what all products. You have to answer my question. मेरे सवालों का जवाब दो ना. All right, waiting for your answer. A company is producing 3 products, product X, product Y, product Z. Product X has 15 crore turnover, product Y has 12 crore turnover, and product Z has 10 crore turnover. X and Y are specified under table A and B respectively. Z is not specified at all. Please tell whether cost records is applicable or not. Under rule 3, whether cost records is applicable or not. And if yes, for what products should the cost records be prepared? Not applicable. Cost records are not some students are saying cost records are not applicable. Applicable. Yes, absolutely, guys. So first of all, please understand that the cumulative of these 3 is coming out to 37 crores. So the turnover which we need to see is of all the products, which means the entire company, okay? Entire company, the turnover is 37 crores. We don't only have to see the products which are covered under table A and B. No. It is written that overall turnover of the company is to be seen. Okay, overall turnover of the company, including the non-specified goods, also is to be seen. The entire turnover of the company is to be seen. Okay, so entire turnover of the company, which means all the 3 products, is 37 crore. So the first question, whether cost records is required to be maintained, answer is yes, cost records is required to be maintained. Yes, cost records is required to be maintained. And question number 2, whether what products are covered under the cost records. Product Y and product Z are required, product X and product Y are required to be covered under the cost records. Product X and Y are required to get their cost records done. We need to prepare cost records only for X and Y. That's the answer. Yes, cost records is applicable. Very good. On X and Y. Very good answer. Okay. So overall turnover of the company is to be seen, guys. While deciding for cost records, overall turnover of the company is to be seen, and the overall turnover of this company is 37 crore, which is more than 35 crore. Cost record is required to be prepared. Cost record is required to be prepared. Now, sir, please tell us what things are to be excluded and what things are to be included in turnover. What things are to be excluded and what things are to be included in turnover definition. So, guys, in turnover definition, you have to include sale, supply, trading of all the products and services. Okay, please remember the word all. All means whether covered under the records or not. All means whether covered under table A or B or not covered. Okay, so all products and services are to be included in the turnover definition. Then second is any job work charges or loan license charges. Okay, we have earned money using job work for someone else, then that is also to be included in the turnover. Export benefits like DEPB passbook, we have earned some credits of DEPB. Okay, that is also to be included. Scrap sale, if you have sold some scrap and because of that some income has been generated, that is also included in the definition of turnover. Then operating income, any other operating income is to be included in the definition of turnover while calculating the aggregate turnover of the entire company. Entire company's turnover is required to be included. What are the exclusions? What are things that are not required to be included? Duties and taxes are not required to be included. Any kind of, say GST is paid and IDC is not available on it, it is not required to be included in the turnover definition. Any other kind of duty that you have collected from your customer, and that is coming in your revenue side, not included in the turnover definition. Okay. Secondly, any other income. Other income means income like financial income, non-operating income. Any income which is non-operating income, like you have earned interest on your savings bank account, you have earned interest on your any other account, or the company has earned dividends. If it has it has invested in shares, then it has earned dividends. So any kind of dividend is to be ignored. Any kind of financial income is to be ignored. So other income are to be ignored. Only the normal income, the business related income are to be included. Only the business related income are to be included in definition of turnover. Only the business related income are to be included in definition of turnover. Okay, that is very, very important. What is the definition of turnover? It is really important to note this aspect. Okay, sir, got it. Now please tell me in the chat box whether it is clear how this turnover is required to be calculated, and how do you specify what products are covered under cost records. Is it clear? Please comment in the comment section if you are clear about how the turnover is required to be calculated. Please comment in the comment section. Is it clear? Okay, so if all the three conditions are met, then you are required to prepare your cost records. So foreign company, when now we are coming to exceptions. Okay, but before coming to exceptions, I want your nod on whether you understood these three aspects or not. X and Y only. Very good. Rohit Raj is now answering on the app. Very good. At least one student is answering on the app. Yes, very good. Perfect. Great. Very good. Yes, clear. Very good, very good. All right, now we come on to the exceptions of cost records. Situations where even if your monetary threshold is met, even if you are producing the specified goods, even if both the conditions are met, then also you are not required to prepare cost audit. So what are the exceptions to rule 3? Now we're going to study the exceptions to rule 3. There are two exceptions to rule 3. Number 1, any foreign company having a license office for product 33 in India. Any foreign company who's only having a license office in India with respect to product 33. What is product 33? That long list of products. Yes, that is 33. So if any foreign company is there who's having only a license office in India, who's supplying these goods through that license office in India, these goods through a license office, it is known as LO. Any foreign company who's supplying any of these goods using a license office in India, those are excluded from cost records, even if their turnover is above 35 crores. They are not required to get their cost records prepared. Because if a company has opened a license office in India, then the primary purpose is to publicize their products, to market their products which are used for medicinal purposes. They are all products which are used for medical purposes. Okay, so the cost records are not required to be prepared in this case. Cost records are exempt, even if the turnover is above 35 crores. Okay, so the first exception is a foreign company having a license office for product category 33 is exempt from cost records. This is the first exception. What is the second exception? Second exception is micro enterprise and small enterprise under the MSMED Act. So there's an act which is Micro, Small and Medium Enterprise Development Act 2006. According to this act, the companies are divided into micro enterprises, small enterprises and medium enterprises. So medium enterprises are not exempt from cost records, but micro enterprises and small enterprises are exempt from preparing their cost records. And yes, in the examination, the question will give you specifically that this particular company is a medium company or a micro company or a small company. Please remember, only micro and small are exempt. Medium is not exempt. Sometimes the examiner will trick you by saying that this company is a medium company under the MSMED Act, registered under the MSMED Act. This is a medium sized company. It is not exempt. Medium size is not exempt. What is exempt is micro and small. Micro and small are exempt. Medium is not exempt. That is a very, very important distinguishing factor that you need to understand. Micro enterprise, small enterprise is exempt. Medium enterprise is not exempt in this particular case. Okay, sir. Got it. So this is how the enterprises are classified, and this is how the enterprises are used in an exception. Okay. So this was rule number 3 for you. The rule is not applicable to foreign companies having only license office in respect to product category 33 above, and micro enterprise and small enterprise as per the MSMED Act. And the monetary threshold is on table A as well as table B products is that overall turnover of the company from all the products or services during immediately preceding financial year is 35 crores or more. The overall turnover of the company is 35 crores or more. Now one question to you, one very tricky question to you, okay? One very tricky question to you. A company produces two products, product X, which is table A, product Y, which is table B. Company is producing two products, product X, which is table A, product Y, which is table B, and the company might also be producing some other kind of products which are not covered under table A or B. My question to you is, please listen to the question very, very carefully. Is it possible under any circumstance that cost records are required to be prepared for product X and they are not required to be prepared for product Y? Is it possible under any circumstance that cost records are required to be produced for product X but they are not required to be produced for product Y? Is there this possibility is there? Under any circumstance, is it possible? Please tell me in the chat box that cost records are required to be prepared for product X but they are not required to be prepared for product Y. Is it possible in a same company? Can we say that, table A products, please don't prepare cost records, table B products, please prepare cost records? Is it possible? Please tell me yes or no. Can there be any situation like this? Can there be any situation like this? I want to know your analysis. Can there be any situation like this? No one is answering, huh? Is it that tricky a question? Okay, Rohit has answered no. Okay. Any other answer? Any other answer? So guys, this is not possible. Either cost records will be prepared for both or cost records will not be prepared for any, because the threshold is not table wise. Threshold is for the entire company. So if cost records will be required, it will be required for both. If cost records are not required, it will not be required for both. It cannot so happen that cost records are required to be prepared for one of the product and cost records are not required to be prepared for other product which is table A or table B product. That is not possible. Yes, in circumstance of not meeting threshold of respective table. No, there is no threshold of respective table. That's the whole point. Ajay is saying yes in the circumstance of cost of not meeting threshold for respective table, but the catch is that respective table threshold is not there in cost record. It is there in cost audit, not in cost record. In cost record, respective table threshold is not there. Very good answer. Very good answer. No sir, for cost audit this is the criteria. Very good answer. Perfect. So in case of cost records, either both will be covered under cost records or neither will be covered under cost records. There cannot be a situation where one is covered under the cost records, other is not covered under the cost record. This situation cannot so happen. Okay sir. Got it. Let us see some FAQs which are issued by the institute. Is there any prescribed format for preparation of cost records and cost audit report? So for cost audit report, there is a format which is specified under the rules. But for cost records, there is no specific format which is being prescribed. You can prepare a cost sheet in any format. Whatever format you have studied in SCM, you can prepare a cost sheet in that format. It's just that the rules and regulations which are which we'll be studying in our syllabus as well, which is cost accounting standard. They are to be followed while drafting that cost sheet. That's it. Just remember that you have to follow the rules and regulations and follow the cost accounting standards. Otherwise, there's no format which is prescribed for cost records. But yes, there's a format which is prescribed for cost audit, which is given in CRA 3. There's a format which is given for cost audit. And turnover, we have already studied what are the inclusions and exclusions of turnover. Okay, so that covers our rule 3. Rule 3 is over. Now we come on to rule 4. And you tell me in the chat box, guys. You tell me in the chat box. You tell me in the chat box. What is the first condition of applicability of rule 4? Under what circumstances will rule 4 be applicable? The first condition. First condition, you tell me. First condition of applicability of rule 4. You tell me the first condition and I'll tell you the second one. Yes, the first condition is that, sir, rule 3 should be applicable on you. If rule 3 is not applicable on you, matter over, matter ends, no cost audit for you. So the first condition is cost records should be applicable on this particular company. If cost records is applicable on this company, only then we will, analyze whether turnover threshold is met or not. If cost records are not applicable, then we need not analyze whether turnover threshold is met or not. We straight away reject this company for cost audit. We don't conduct cost audit for this particular company. So the first and foremost requirement is rule 3 should be applicable, which means cost records should be required to be prepared. Only then will we analyze the monetary threshold for cost audit. Without analyzing rule 3, we will not analyze rule 4. So rule 3, if not applicable, rule 4 entirely will not be applicable. Okay. So first condition for applicability of rule 4 is rule 3 should be applicable. Plus, monetary threshold of preceding financial year should be met. Monetary threshold should be met for the immediately preceding financial year, which is the monetary threshold which is given in this particular rule. And if both the conditions are cumulatively satisfied, then cost audit to be done for the specified products and services. Again, cost audit is required to be done for the specified goods and services only. It is not to be done for all the goods and services. Only for specified goods and services, the cost audit is required to be done. All right. First, we talk about table A products. For table A products, the monetary threshold is overall turnover of the company should be 50 crores and turnover of the products covered under rule 3 should be 25 crores. So first we analyze the cost audit requirements for table A products. Okay. First condition is that overall turnover of the company's overall turnover, which includes everything, right? Table A product, table B product, other income, other operating income, non-specified goods, everything. Overall turnover of the company should be 50 crores and turnover of the products covered under rule 3 is 25 crores. Now one very specific word which is included over here, which I have specifically written, is aggregate turnover of the products covered under rule 3. Now, moot point of consideration which is to be remembered over here is that while you calculate the turnover of the products covered under rule 3, this should be a cumulative of table A plus table B. This should be a cumulative of table A plus table B. Even when you are analyzing the applicability of cost audit on table A products, the threshold should be a total of table A and table B turnover, because the rules 3 specifies both table A and table B. This is a very big mistake which students does from an exam standpoint. They would only take the turnover of table A products in this condition. Incorrect. For fulfilling this condition, table A plus table B product, both turnover should be taken 25 crores. That is the very important point which you need to really understand. Okay. Then overall turnover of the company for category B product, overall turnover should be 100 crores. Again, this is unregulated sector, so limit is little high. This is regulated sector, limit is little low. Limit is low. Total aggregate turnover of the products covered under rule 3 should be 35 crores. So aggregate turnover of all the products covered under rule 3 should be 35 crores. That is the monetary threshold which is required to be met. If both the conditions are met cumulatively, only then we will say that cost audit can be done for product A, and then can we say that cost audit is done for product B. Now, the important point of consideration over here. Limits are different for A and B. So now, it is very much possible cost audit is to be done for product A and not B, or vice versa. It is possible that cost audit is done for A but not for B, or vice versa. Cost audit is done for B but not for A. This is very much possible because there are individual threshold limits. Now, before entering into the nitty-gritties of this section, let us do one practical question, okay? And once we do the practical question, then you will be able to understand how to apply the monetary threshold limits. Now, this is a practical question which I have extracted from the FAQs which have been released by the CMA Institute on February 2024. So, based on the FAQs, this example has been extracted, okay? All right. So, you have to fill these columns, guys. You have to fill these columns. We'll together fill these columns. And if you know the answer, you can, put the answer in the chat box in advance. That will be really good. If you know the answer, please put the answer in the chat box in advance. Case 1, 2, 3, 4, 5, 6. You can just write case 1, what is the answer? Case 2, what is the answer? You can write in the chat box, okay? Okay, sir. Case 1. Table A product, which is regulated sector, turnover is 5 crores. Table B, unregulated sector, turnover is 10 crores. Table A plus B, which means the goods which are covered under Rule 3, 15 crores. Other products which are not covered under A, not covered under B, 19 crores. Total turnover of the company, 34 crores. 19 crore plus 15 crore. 19 crore plus 15 crore is equal to 34 crore. Now the question is whether cost records are applicable or not. Of course not. Cost records are applicable? No, because it is less than 35 crores. Overall turnover of the company is less than 35 crores. So cost records are not required to be prepared. Rule 3 should apply? No, Rule 3 should not apply. Cost records are not required to be prepared, right? And if cost records are not required to be prepared, then of course cost audit is out of question. So I'm not even analyzing cost audit. I'm just putting in no. Cost audit is no. Okay, case 2. Product table A 5 crore, table B 10 crore, table A plus B 15 crore, other products 25 crore, which means total turnover of the company is 40 crore. So is cost records applicable? Yes, cost records is very much applicable. On which products? Both A and B. Table A products, table B products, cost records is applicable. So on both A and B, cost records are applicable. Right, that is the answer. Cost records is yes. Now we analyze cost audit. First of all, we'll analyze for table A products. What is the applicability of cost audit for table A products? First condition is for table A products, overall turnover of the company is 50 crores. So is first condition met? Answer is no. First condition is not met. Overall turnover of the company is less than 50 crore. So should I analyze the next condition? No, because one condition is not met. Cost audit is not there. I will simply write a no. I will not even analyze the second condition. I've simply written a no. Cost audit is not required to be prepared. Then for B product, for product B, whether cost audit is applicable, okay. For B, the limit is overall turnover of the company should be 100 crores or more. Sir, the overall turnover of the company is only 40 crores. So again, for B also it is a no. Case 2 understood? Please write a yes in the chat box if case 2 is understood by each one of you. Case 3. Now we start case 3. Okay. Case 3. Table A products 10 crore. Table B products 15 crore. Table A and B taken together 25 crores. Table A and B taken together 25 crore. Table A and B Rule 3 products. Okay. Other products 26 crores. 25 plus 26. Total turnover of the company 51 crores. Will cost records be applicable? Absolutely yes. Cost records will very much be applicable. Okay. Now talking about cost audit, let us first analyze product A, whether cost audit is applicable on table A product. Okay. Now, first condition is for table A, overall turnover of the company should be 50 crores or more. Is overall turnover of the company 50 crore or more? Yes, sir. Very good. Answer is yes. First condition is met. So, table A, first condition is overall turnover of the company should be 50 crores or more. Yes, condition met. Second condition is aggregate turnover of products covered under Rule 3. Rule 3 has table A and table B. Should be 25 crores or more. Let's see if this condition is met. So what is the aggregate turnover of table A and table B products? The aggregate turnover of table A and table B products is 25 crores. So yes, second condition is also met. First condition is also met. Second condition is also met. 50 crores above and 25 crores above. So will cost audit be eligible for product A? Answer is yes. Now in this part, mostly students make a mistake. Instead of looking at this turnover for the second condition, instead of looking at this turnover, they look at this turnover. This is an incorrect approach. This is an incorrect approach. Because the second limb says that aggregate turnover of products covered under Rule 3, and Rule 3 has both A and B and not only A. So you have to analyze the total turnover of A and B products. Rule 3, total turnover of A and B products. Please remember this thing very carefully. Although we are analyzing cost audit for product A, right? Table A product, right? But this leg will cover A and B both turnover. Aggregate of turnover of A and B, that should be more than 25 crore. Mostly students make this mistake that they take this figure while analyzing instead of this figure. This is the correct figure. Table A and B products which are covered under Rule 3. Rule 3 products are these. Very, very critical point from an exam standpoint. Very, very critical point from an applicability understanding standpoint. Okay. So is cost audit applicable? Yes. For product B, table B, no. Because 100 crore turnover is not met. If 100 crore turnover is not met, then of course there's no a point in analyzing the next condition for table B. Table B, cost audit is not required to be prepared. Table A, cost audit is required to be prepared. Table B, cost audit is not required to be prepared. Okay. Next, case 4. We are not producing table A product. Table A product is not being produced. Table B product, 25 crore turnover is table B product. Table A and B is 25 crore. Other products are 26 crore. So 25 plus 26 is 51. Whether cost records are required to be prepared? Yes, cost records are required to be prepared for table A, table B both. Okay. Cost records are yes, required to be prepared. Now, the next question is whether cost audit is required to be done for table A product. Let's analyze. The overall turnover of the company should be 50 crores or more for table A products audit. Is it? Yes, it is. Very much. And the next condition is that the turnover of table Rule 3 products should be 25 crores or more. Is the second condition also met? Yes, the second condition is also met. So both the conditions are met for table A cost audit. But still we will write a no over here. Why sir, why sir, why? This is not fair sir. This is why sir? Both the conditions are satisfied for table A. First condition, more than 50 crore overall turnover. Second condition, turnover of table A and B products 25 crore. Both the conditions are satisfied. Then why no? Should be yes. No guys, it cannot be yes because we are not producing table A products at all. When we are not producing table A products at all, what will you do cost audit for? It's a 0. It's a 0. So we will not do cost audit for table A because table A product is not prepared. That's the catch which is there in this particular question. Okay. So this is a no, and of course for B also it's a no because 100 crores turnover is not crossed. 100 crores turnover is not crossed, so it's a no for product B also. Okay, next is case 5th. In case 5th, table A product is being produced for turnover of 20 crores. Table B product is being produced for 14 crores. So total of table A and B products is 34 crores. Okay. Total of table A and B product is 34 crore. Okay. Other product is 75 crore. 75 plus 34 is 109 crores. So first of all, is cost records applicable? Yes. I am writing yes to next also because I know that is also a yes. So cost records is a yes. 35 crore turnover is crossed. Now let's analyze product A whether cost audit is applicable or not. Number one condition, overall turnover of the company should be 50 crore or more. Is it crossing? Yes. Condition number 2, the table A plus B product turnover should be 25 crore or more. Is the condition applicable? Yes, very much applicable. So product A cost audit is a yes. Product A cost audit is a yes. Very good. Manisha has written a detailed answer. Very good, Manisha. Very good answer. Your answer is very detailed. Perfect. Next, table B product, whether cost audit is applicable or not. Condition number 1, overall turnover of the company should be 100 crore or more. Condition is met. And the second condition is the aggregate turnover of table A and B product should be 35 crore or more. No sir, this condition is still not met. 35 crore or more is the turnover, which is table A and B combined together for table B audit. Please see this. Table B, turnover products covered in rule 3 should be at least be 35 crores. Overall turnover should at least be 100 crores. So that is the monetary limit. Next is case 6. In case 6, the overall revenue is 101 crore. 20, 20, 40, 61, 101 crore. So is cost audit applicable for A? Answer is yes. Is cost audit applicable for table B product? Answer is again a yes, because both the conditions are satisfied. Table A and B is 40 crore. Overall turnover is 101 crore. Both the conditions are satisfied. So it's a yes and a yes. Very, very critical analysis. Kumar Singh Visen says yes, yes, no. No, your answer is incorrect, Kumar Singh. Answer is yes, yes, yes in the last part. Case 6 is yes, yes, yes. Cost audit is applicable for both the products. Yes, that is the correct answer. Perfect, perfect. So very, very critical point to be noted over here. Very, very critical, thing to be noted over here. You really need to understand that this particular limb, this is very, very critical. Students, make mistake in this particular limb. So in this, rule 3 aggregate turnover is required to be calculated. Rule 3 aggregate turnover is required to be calculated, and not only the turnover of the product for which you are analyzing the cost audit. No, entire rule 3 turnover is to be calculated in this particular limit. That's the requirement. Very, very important from an exam standpoint. Okay, sir, got it. All right. Now let us see if we can do some more questions. Okay. Let's do a few more questions and let's see if we are able to analyze the answers or not. Let's figure out some more questions, okay? DIY, do it yourself. We have 5 or 6 case studies. I want you to answer these case studies even before I have answered these case studies. And the students who are watching the recorded lecture, please pause the lecture over here. Solve the case study, then you see the answer, okay? Students who are seeing the recorded lecture. And students who are live, please give the answer before I tell you the answer. That's the true test. Okay, so a company importing product A, B and C covered under table B of rule 3 and carrying on labeling and relabeling activities. So it's labeling and relabeling. Relabeling also is covered under manufacturing activity. It's also a manufacturing activity. It's not a trading activity. It's a manufacturing activity. Product A, okay, covered under table B. Table B, product A, B, C. All 3 are covered under table B. All 3 are covered under table B. A, B, C, all 3 products are covered under table B. Turnover of A 5 crore, 2 crore, 3 crore, total turnover is 10 crore from these products, okay. Selling of imported products ABC as it is without repacking. So this is trading, this is trading, this is manufacturing, this is manufacturing, and this is trading. In this we are trading, right? Trading is not covered under the purview of the rules unless trading is only for serial number 33. Trading is not covered under the rules. That's the thing. Okay? So we are trading product A, B, C, D, F. We are trading all these products. Total turnover is 108 crore from trading, 10 crore from manufacturing. So total turnover is 118 crore. Total turnover of the company is 118 crore. Now the ask is, the question is, kindly let us know whether cost audit is applicable considering the above. I'll ask you another question. You tell me whether cost records are, applicable in this case or not. Whether cost records are applicable in this case or not. So the turnover is more than 35 crores. So yes, cost records are applicable. Rule 3 will very much be applicable. Okay. Rule 3 will very much be applicable. Since the total turnover of the company is more than 35 crores, Rule 3 is very much applicable. Yes, I will also tell you about the presentation, how to present the answers. In fact, I have done the presentation over here itself. Okay. So yes, rule 3 is applicable. Cost records are required to be prepared. Now the second question is, the second ask is whether cost audit is applicable or not on all these products, whether cost audit is applicable or not, whether they will be subject to cost audit or not. So, for table B products, the first limit is that overall turnover of the company should be more than 100 crores. Is it more than 100 crore? Yes. First condition is met. For table B products, first condition is met. The overall turnover of the company is more than 100 crores. So the first condition is met for this particular company. Now you tell me in the chat box, you guys please tell me in the chat box whether cost audit second condition, whether cost audit second condition is met or not for table B products. Whether cost audit second condition is met or not for table B products. Second condition. Second condition is that the products which are covered under rule 3, they should be they should be their turnover should be 35 crores or more. That is the second condition. You tell me in the chat box whether that condition is met or not. Whether second condition is met or not. No, cost audit not applicable. Okay, very good answer. So guys, the turnover which is covered under table A or B is 10 crores. Some students make a mistake. They also take turnover which is these three turnover. These three turnover are not covered under rule 3. These three turnover are not covered under rule 3, although they belong to the product. But this is not covered under rule 3. Rule 3 is only governing this. And it's less than 35 crores. Cost audit is not applicable. Cost audit is not applicable. So please have the analysis ready with you. Presentation is very easy. First you write down the law. First of all, write down the law. You write down properly that as per the company's rules, rule 4 states that company specified under item B of rule 3 shall get its cost record maintained if overall annual turnover of the company is this and if aggregate turnover of the products and services is 35 crore. So that is how you need to write the law. Then you write your analysis. In the second paragraph, you write your analysis. And the third paragraph, you write your conclusion. This is how presentation is required to be made in the examination. This is the exact presentation which an examiner requires. This is exact presentation which the examiner requires. That is how you need to present your answer. Okay. Let's move on to the second question, part B. Messrs. XYZ Company Limited furnishes the following information in regard to immediately preceding financial year. Now please remember these thresholds are to be seen for immediately preceding financial year. Okay. Table A products 6 crores. Table B products 9 crores. Other products 18 crore. What is total of table A and B? Table A and B total is 15 crores. You need to write the applicability for cost records. What is the applicability of cost records? And what is the applicability of cost audit? You need to write that. Okay. Let's see the cost records first. 18 plus 15 is 33. So cost records are not applicable. Cost records are not applicable. Should we analyze cost audit? Answer is no. We should not analyze cost audit. We should just say that cost audit is also not applicable. So cost records are also not applicable. And cost audit is also not applicable. Both are not applicable in this particular case. So guys, please see the presentation. Presentation will be the same. Section, analysis and conclusion. The presentation will be the same. Let's come on to part C of the case studies. Messrs. ABC Limited furnishes the following information in regard to immediately preceding financial year. Turnover table A 7. Table B turnover 8 crores. Total turnover of table A and B 15 crores. Total turnover of A and B, table A and B 15 crores. Turnover of other products 24 crores. The total is 39 crores of the entire company. So the first question is whether cost records is applicable or not. First question is whether cost records is applicable or not. Answer is yes, cost records is very much applicable because 35 crore threshold is met. So cost records is applicable. 35 threshold is met, cost records is applicable. Now second is whether cost audit is applicable or not. Let's see for each of the product. Let's see first of all for product A, table A. Overall turnover of the company should be 50 crores or more. No guys, overall turnover is not 50 crores or more. Cost audit is not applicable for A. Cost audit is not applicable for B. So cost records is applicable, but cost audit is not applicable. Cost records is applicable, but cost audit is not applicable. Please tell me whether you understood the... And guys, let me tell you a very honest thing, okay? While doing it in class, you say, oh, we are able to understand, it's very easy, it's okay sir, we'll be able to understand it, no problem at all, oh sir, it's very easy. While in the class, you might say this. But the real test is that after the class is over, Then you pick up these notes yourself without looking at the answer, you analyze yourself. If you get your answers correct at that point in time, then you know that you know the concept. Only at that time, if you understand the question well, and if you're able to, do the question right, then you say that you know the answer, okay? Don't jump onto the conclusion that, oh sir, we know everything because we did everything in class. Not the correct benchmark. Harsh Kanjani is also here. Harsh Kanjani, this is CMA final class. Yes, in few months you will be in CMA final, not right now. Manisha records yes. Kumar Singh we saying applicable. No. Alright. So part D. Messrs BK Limited furnishes the following information. Okay. Table A 11 crores. Table B 15 crores. Total is 25 crores. Other products is 28 crores. So 28 plus 25 crores gives you a figure of 53 crores. Gives you a figure of 53 crores. So total turnover of the company is 53 crores. You have to analyze applicability of cost records. Yes, cost records is very much applicable because the overall turnover of the company is more than 35 crores. Cost records is applicable for both the products. Cost audit. Now let's analyze cost audit. Okay. Cost audit for product A. Overall turnover of the company should be 50 crores or more. Yes. Perfect. It is 50 crore or more. Second condition. The turnover of Rule 3 products should be 25 crore, and yes, this is also met. Turnover of Rule 3 product is 25 crore or more, and yes, that is also met. So product A cost audit is applicable. Product A cost audit is applicable. Product B cost audit is not applicable because for product B we need overall turnover of 100 crores or more. Product B, table B, cost audit is not applicable. Okay, so yes, cost records are required to be maintained and cost audit is applicable only for table A. That is the conclusion. But guys, please read the entire solution, okay? And presentation should be absolutely perfect. Writing practice should be perfect. You should be able to write well in your examination, guys, okay? The writing should be absolutely perfect. Okay, sir, got it. Next part. Please try to do part yourself. Please attempt E part yourself. Sun Enterprises furnishes following information. Turnover of table A product 19 crore. Table B product 15 crore. Aggregate of table A and B. Aggregate of table A and B 34 crore. This is 76 crore. Other turnover. So what is the total? 110 crores is the total. 110 crores is the total. First of all, cost records. Answer is yes because the threshold is above 35 crore. Cost audit. Table A. Table A. The overall turnover should be 50 crore or more. Yes. And the individual turnover of the goods which are covered under Rule 3 should be 25 crore. Yes. So table A, cost audit is required to be done. Table B, the overall turnover is 110 crore met, but this is less than 35 crore. So for table B, cost audit is not applicable. So yes, cost record is required to be maintained for both the tables, and for table cost audit is applicable only for table A product. Cost audit is applicable only for table A product. Okay, sir, got it. F part, guys. F part. F part. E same as well. Okay. D. F part. Messrs Alpha Private Limited furnishes following information. Table A 20 crore, table B 22 crores, table A and B taken together 42 crores, other 63 crores, total 105 crores. Is cost records applicable? Answer is yes, cost records is very much applicable, more than 35 crore. Okay. Cost audit. Table A Total turnover 51 crore or more, met. Table B, table A and B taken together. Overall turnover 105 crore. Table A and B together 25 crore or more, it is met. So table A, audit is required to be done. Then we come on to table B, table B products. Table B products, overall turnover of the company should be 100 crore or more. Yes, the threshold is met. Overall turnover of the company is 100 crores or more. Then the turnover of the individual product should be 35 crores or more. Yes, the second condition is also met. So cost audit applicable for both the products, table A and table B. So cost records are required to be maintained for both the products. Cost audit is also applicable for both the products. Cost audit is applicable for both the products. All right, got it. Let's see the next one. Superstar Manufacturing Limited is a listed company, produces products which come under non-regulated sector, which means table B, and classified under Customs Tariff Act. Okay, this is table B. Okay, it produces table B product. The manufacturing process also generates byproducts, waste and scrap. Total turnover of the company for the financial year 25-26 is 160 crore. The breakup of which is as under. Waste and scrap is produced 30 crores. The product manufactures is 80 crore. Byproducts is 50 crores. Total is 160 crores. Advice with justification about applicability of provision of maintenance of cost records. First of all, you have to tell whether cost records are applicable or not. Okay. Then you have to tell whether cost audit is also applicable. Keeping in mind that the turnover of all the above items individually is below 100 crores. So all the items, the turnover is below 100 crores. It is only the aggregate which is above 100 crore, but all the items individually is below 100 crores. So you need to tell whether cost records is applicable or not, whether cost audit is applicable or not in this particular case. So I would like you to answer this question, guys. I would like you to analyze this question and answer this question, because this question is really interesting. So first of all, cost records. First of all, cost records, whether cost records are required to be prepared or not. Whether cost records are required to be prepared or not. That is the first ask. Please tell me in the chat box whether cost records are required to be prepared or not. Sir, overall turnover of the company is required to be seen. Yes. And the overall turnover of the company is more than 35 crores. More than 35 crores. So yes, cost records are required to be prepared. Perfect. So cost records are required to be prepared because the overall turnover is more than 35 crore. Perfect, guys. Okay. Now the catch. Table B products are being produced. Okay. And some byproducts are also being produced. Byproducts and waste is also being produced. Okay. Now, the condition is that overall turnover of the company for table B should be more than 100 crore. This condition is met. Overall turnover of the company for for all the products and services should be more than 100 crore. This condition is met. The second condition is that individual products on which rule 3 is applicable, turnover of those should be 35 crores or more. That should be 35 crores or more. Individual products for which the for rule 3 is 35 crores or more. Now the question is, guys, on what all products will rule 3 be applicable? Whether rule 3 be applicable on waste, whether rule 3 be applicable on product manufactured, whether rule 3 be applicable on byproducts. So I'll give you a very simple example. Rule 3 will definitely be applicable on products manufactured. I'm confused about the byproducts. I'm confused about the waste and scrap. Now you tell me whether rule 3 will be applicable on the byproducts and the waste and scrap. That is the question. So I'll give you the answer, guys. It's a little complicated. Now, waste and scrap is not actually manufactured. It is a residue. It just comes out after the manufacturing process. You don't manufacture or produce waste and scrap. So this will definitely not be covered under rule 3. But byproducts, you deliberately make them because they are of value. These are of very less value. Waste and scrap is of very less value. But byproducts are valuable. Therefore, you deliberately make them. You manufacture byproducts. You carefully you carefully analyze your process to really accumulate some kind of a system where byproducts are also produced because they are valuable. They are valuable. You manufacture the byproducts. Okay. So rule 3 will be applicable for both products manufactured and byproducts, both of them. And both of them's total turnover is 130 crores. So yes, cost audit is also applicable. One very critical point. One very critical point. Okay, so even byproducts are included in rule 3 because it's a byproduct. That is a very, very important analysis which you need to understand. So applicability of cost audit, overall turnover of the company is 160 crore, which is more than 100 crore. It is perfectly okay. Then the table A and B product, the total turnover is 130 crore, which is again more than 35 crores. Since the condition of rule 4.1 and 4.2 are met, therefore cost audit is applicable for the products covered under table B. So you have to maintain cost audit for both this and this. Cost audit is required to be done. Yes, byproduct and waste is sometimes a confusion. So waste cannot be treated as a product which is manufactured. You are not manufacturing waste, but byproduct you are manufacturing. You are manufacturing byproduct. So that is required to be undertaken. Okay, sir, got it. So very critical part, very you have to be really careful in this particular part. Okay, sir, got it. All right. So yes, these were some examples of this particular rule. Now let us come on to the exceptions of this rule. What are the exceptions of this rule? So exception number 1 is that if your export turnover, if your export revenue, table A and B products exceeds 75 of your total revenue, then you are exempt from cost audit. You need not prepare your cost audit. You need not get your cost audit done. If your total revenue, export revenue is more than 75% of your total revenue, then you need not get your cost audit done. That is the first condition which you need to remember. Exceptions to rule 4. Export revenue should be more than 75% of the total revenue. Guys, Government of India always promotes exports. They always give some benefits to the exporters. Same benefit is given over here. Even if the exporter's turnover is 500 crore, 400 crore, whatever, but if 75% is being exported outside India, cost audit is not applicable. But in this case, cost records is very much applicable. This is exception to cost audit and not cost records. Please know this point. Cost audit is not required to be done. Cost records are required to be prepared in this particular case. Please remember this very critical point. Okay. Next, companies operating from SEZ. So if you are a company which is operating from SEZ, Special Economic Zone Unit, Special Economic Zone, you are not required to get your cost audit done. But again, cost records are required to be prepared if your threshold is met. Cost audit is not required to be done. Okay. And the last one is companies engage in generation of electricity for captive consumption. So many companies have got their own electricity plant where they generate their own electricity and they use it in their own business. They generate their own electricity and they use it in their own business. So they captively consume electricity. All the electricity comes in the category A table: generation, transmission, distribution, supply of electricity. Electricity is covered under table A, category A. But still, if electricity is only used for captive consumption, which means you are producing electricity and you are consuming it within your own factory, then you are exempt from cost audit. Cost audit is not required to be conducted by you for this particular electricity. Okay, sir, we got it. So these are the exceptions to rule 4. The next aspect of our chapter, Companies Cost Account and Record Rules 2014. And guys, in this particular chapter, we have already studied what is the applicability requirement of cost accounting and what is the applicability requirement of cost audit. These two aspects we have already studied in our yesterday's class, where we have explored how cost audit will be applicable on certain companies, how cost records will be applicable on certain companies, what are the rules and regulations which are essentially enunciated for applicability of cost accounts and cost records. This we had seen in our last lecture, and I hope that the principles which we have covered in our last lecture are absolutely clear to all of you. Let me open the charts. Yes. Let me open the charts for all of you. Okay, please confirm in the chat box if you have revised rule 3 and rule 4, which I have done in the last class. Please confirm in the chat box, because I want proper regular revisions. That is very much a basic thing that I require from each one of you. Regular revisions of each and every topic is a essential thing if you really want to score well. And if you want to pace up with me, then regular revisions is very much required. So have you revised yesterday's rule 3 and rule 4? Please confirm in the chat box. Have you revised it or not? Because applicability is very, very important, especially the aspect where we see that how the limits are to be applied while calculating, while analyzing the applicability of cost records and cost audit. Yes sir. Manisha says yes sir. Nidhi Gupta says yes sir. Okay, very good. Perfect. It's very important to understand how case study based questions will be analyzed, because in the examination there is a high possibility that case study based questions will come in your examination. Okay, so the net worth criteria, the criteria of turnover is to be clearly understood by each one of you. That is a very, very important thing. Okay sir. Then guys, yesterday the last topic which we had done is the exceptions to rule 4. Okay, so the applicability we have already analyzed in great detail in the PDF file which has been provided to all of you. There are case study based questions at the end of the chapter. Please do all those case study based questions. Please analyze and yourself compute whether cost records will be applicable or not, cost audit will be applicable or not. This you have to clearly analyze, and clearly you should be able to write well about the analysis of your entire question. So please do that yourself. Now exceptions to rule 4, we had studied 3 exceptions to rule 4 in our last class. Number 1, export revenue, table A and table B products exceeds 75% of the total revenue. Now it's very, very important to note that the export revenue relating to table A and B should be 75% of the total revenue. That is a very, very important thing to be noted, that export revenue should be 75% of the total revenue of table A and B products. If you are an exporter and if you are exporting any of the goods which are being produced under table A and B, then 75% is your export ratio. Then you are exempt from cost audit. Cost audit will not be required to be done by you. Please tell me if this condition is satisfied, whether cost records will still be applicable. Please tell a yes or no. If this condition is satisfied, cost audit is not applicable, that is for sure. But if this condition is satisfied, then cost records will still be applicable or not. Please tell in the chat box whether cost records will be applicable. Yes, very good. Cost records will still be applicable. This is a very fine line of difference that you need to understand. Okay, there is different exceptions for cost records. There are different exceptions for cost audit. Both are absolutely different. So if cost audit is not applicable, that doesn't mean cost records will also not be applicable. No. In this case, cost records will be applicable. So examiner might try to confuse you by giving these two parameters and asking you to analyze the exceptions. Okay. So yes, second one is companies operating from SEZ. If a company is operating from a special economic zone, then again cost audit is not applicable on those companies. Special economic zones are anyways exempt from many things. Okay, they are almost treated as export houses, export units, so they are anyways exempt from many things. So companies operating from SEZ are again covered under exception to rule 4. Companies engaged in generating of electricity for captive consumption. If a company is engaged in generation of electricity for captive consumption, which means for its own use. Okay, so I have a big company over there, electricity connections are not there, so I have implanted my own DG set, or I have my own area where electricity is being generated, but entirely for home consumption, for my consumption only. Okay, then I'm not required to conduct my cost audit for electricity generation. Okay, for electricity generation. But if I'm producing anything else, then cost audit is applicable. For electricity, cost audit is not applicable, because electricity is included in the table A, regulated sector. So please remember this thing, that for electricity, the cost audit is not applicable if it is captively consumed. If it is consumed within your organization, within the business, then it is not required to get cost audit done. Otherwise, cost audit is required to be done. All right, let us see one question with respect to SEZ. So I'll cover two aspects in great detail. Number one is SEZ. Number two is electricity for captive consumption. We need to really understand these two aspects in great detail. So first of all, I'm going to have an example for the SEZ. So example on exclusions to rule 4. Messrs Saurashtra Private Limited is manufacturing paper and its turnover from its 2 units for preceding financial year is given below. So there's a company which manufactures paper, and its turnover for the last year is given to you. There are 2 units. Unit number 1 is Ballabgarh factory, rupees 66 crore. Unit 2 is Baddi factory, which is situated in Himachal Pradesh. Okay, it is revenue is 42 crores. Now Baddi unit is located in a SEZ. Now the catch is that both the units paper is being produced. Baddi unit is located in SEZ. In SEZ, Baddi unit is located. Comment on the applicability of exclusion to rule 4. Now you have to tell me whether this company is exempt from cost audit or not. That is the question. Okay, one unit is in SEZ, other unit is not in SEZ. Whether the entire company is exempt from cost audit, that is the question. First of all, let's see if the criteria is met or not. First, let's see if the criteria is met. Okay. So yes, the overall turnover of the company is more than 100 crores. So yes, the criteria is met. First criteria is met. Okay. And the second criteria for table B products is that the entire, the turnover of turnover of rule 3 products, which means this and this, should be more than 35 crores. That is the criteria. Now you have to tell me whether cost audit is applicable, and if yes, then on which unit. Whether Ballabgarh factory should be subject to cost audit, whether Baddi factory should be subject to cost audit, or both the factories should be subject to cost audit. That is the question. Please answer the question. मेरे सवालों का जवाब दो ना. Both not exempt. So Rohit is saying both of them should be subject to cost audit. Okay. Manisha is saying not exempt. Rohit is saying not exempt. Tanisha is saying yes. Nidhi is saying yes. Now my question is whether both the units will be subject to cost audit or any one unit will be subject to cost audit. That's my question. 2 answers I have got where it is being said both the units are subject to cost. Any other answer? Any other answer? Please tell me if there is any other answer which you can think of. Any other answer? Ballabgarh factory only. Okay. Ballabgarh factory only. Nidhi also says only one unit. Tanisha says rule 4 will be applicable only on Ballabgarh factory. Very good answer. Perfect. Any other answer? Any other answer? So yes guys, this is a tricky situation where half of the company, which is one of the units, is categorized under cost audit. One of the unit is not categorized under cost audit, which means that the Ballabgarh factory is not an SEZ. Baddi factory is an SEZ. Okay. So now there is a problem whether we conduct cost audit or not. If yes, of which of the units? So there was a FAQ which was released by the Institute of Cost Accountants of India, and the FAQ clearly said that only and only that unit which is located in a non-SEZ unit, that will be subject to cost audit. So cost audit will be applicable only to Ballabgarh factory. But yes, cost records will be applicable to both the factories. Cost records will be applicable to both the factories. So that is how you need to answer in the examination as well. These are minute things which are clarified by the FAQs which are released by the Institute of Cost Accountants of India. So only one unit is required to get its cost audit done, and the unit is Ballabgarh factory is required to get its cost audit done, but the factory is not required to get its cost audit done for the same product, which is paper. Okay sir, got it? Please write the answer. I am dictating the answer. Please write the answer. You have to write the question also in a register or in your book itself. You can write write the question. as per rule 4 of the company's cost records and audit rules 2014, as per rule 4 of the company's cost records and audit rules 2014, the requirement of cost audit shall not apply on a company which is operating from special economic zone. Full stop. Further, the requirement of maintenance of cost records. Further, the requirement of maintenance of cost records shall still apply to both SEZ and non-SEZ unit. Shall still apply to both SEZ and non-SEZ unit. Full stop. Next paragraph. In the instant case, cost records will be applicable. Maintenance of cost records will be applicable. In the instant case, comma, maintenance of cost records will be applicable to both locations. Applicable to both locations, that is Ballabgarh factory as well as Baddi factory. Maintenance of cost records shall be applicable to both the locations, that is Ballabgarh factory as well as Baddi factory. Full stop. Next paragraph. However, cost audit will be applicable only to the unit located in non-SEZ location. Unit located in the non-SEZ location. Next paragraph. Therefore, the Ballabgarh factory, bracket open, located outside the special economic zone, bracket close, would be covered under cost audit. Full stop. Okay, if you understood the concept, please comment, yes sir, we understood the concept. All right, understood, yes. Can you please repeat the last sentence? I cannot repeat the last sentence because I don't remember the last sentence. Can anyone type the last sentence? Please type the last sentence in the chat box. All right. So now we come on to captive consumption. Okay. Now the rule is very clear that if we are preparing electricity for captive consumption, that is if we are consuming the electricity in our own business, in our own factory, then cost audit will not be applicable for that particular part of electricity. That is very clear. Rule is very clear. Now the question arises, sir, what if we are generating electricity, partly we are self-consuming and partly we are selling outside, then what will happen? The question is, if we are generating electricity and partly we are self-consuming, partly we are selling outside, then what will happen? That is the question that arises at this point of time. And obviously, guys, there can be multiple permutation combination. So FAQ has been released by the institute regarding this aspect also, and this is that FAQ. So the FAQ states that whether maintenance of cost accounting records and cost audit thereof is applicable to products which are for 100% captive consumption. So is cost audit applicable for 100% captively consumed electricity or 100% captively consumed goods? So guys, this FAQ is not only about electricity. It is not only about electricity. It is about any good which is captively consumed. Any good which is captively consumed. Good which is captively consumed. Not only about electricity, which is captively consumed. So now what is this captive consumption? What do you mean by goods which are captively consumed? I'll tell you what do you mean by goods which are captively consumed. So guys, there is a production process. There are different processes of production. In this process, product A is manufactured. Okay. This is process 1. According to this process, product A is manufactured, right? And this is the next process, process 2. And in process 2, this is process 2. And in process 2, product B is manufactured. And product A is captively consumed in product B. Product A is captively consumed in product B. This can be a situation, right? We are producing two products. Product A we are manufacturing, product B we are manufacturing, and product A is 100% captively consumed in product B. So I'll give you a very easy example, guys. Fevicol, adhesive. Adhesives are used in various industries for pasting work. And for pasting, adhesives are sometimes self-manufactured in the company itself. If you self-manufacture adhesive, then you are benefited by having a adhesive consistency which is a higher consistency other than the normal adhesives. This is a very usual benefit. So we have adhesives in market like Fevicol. We have Fevikwik. Now we want an adhesive which is not as strong as Fevikwik and which is not as light as Fevicol. We want a middle adhesive. It is not present. So we have to produce that adhesive ourselves. So what we are doing is we are producing adhesive and we are using it in our furniture. We are making wooden furniture and we are using it in our wooden furniture. We are not selling this adhesive in market. No, we are not selling this adhesive in market. Now the question is, adhesive comes under chemical compositions which is covered under cost audit. Adhesive comes under chemical compositions which is covered under cost audit. However, furniture does not come under cost audit. Furniture does not come under cost audit. And our turnover from selling of furniture is huge. It is like 100 crores or 200 crores is the turnover from selling of furniture. We are producing adhesive also. Adhesive is covered under table B. Adhesive is covered under chemicals under table B. Furniture is not covered anywhere. Now this is the problem. Problem is that yes, furniture is not covered anywhere. So we are out of purview of cost audit, but there's an intermediate product which is adhesive which we are producing, and adhesive is covered under table B. But there is no turnover of adhesive because we are not selling adhesive in market. We are not selling adhesive in market. We are selling this adhesive to ourselves. Self-consumption. Now the question is whether cost audit is applicable or not. That is a very big problem of captively consumed goods, where the ultimate product is not covered under cost audit and the intermediary product is covered under cost audit. Guys, let us take a different situation. This adhesive is being used for preparing jute articles. Then no problem at all. Why? Because jute is already covered under the purview of cost audit. We will get the cost audit done for jute. Automatically, adhesives cost audit will be done, because jute will contain a cost which is adhesive. So adhesive will also be checked. So not a problem. Where both of them are covered under table B, no problem at all. We have no tension at all. But the tension is under a situation where the ultimate product is not covered under table B, but the intermediary product is covered under table B. That is a problem which is created for all the manufacturing companies, because they don't know whether we need to get our cost audit done or not. There is no turnover for adhesive because adhesive is not being sold in market. And the turnover which is there, it is for furniture. Furniture is being sold in market, but furniture does not get covered under table B. Now what to do in such a situation? That was the problem which was resolved by Institute of Cost Accountants of India, and they gave this FAQ, frequently asked questions answer. They gave this. What is the answer? Answer is, in case a product is manufactured and 100% captively consumed for production of some other product which is also covered under the rules and is subject to cost audit. So this is situation number one. Situation number one is, you are producing captively consumed good which is covered under cost audit, and you are using it for a final product which is also covered under the rules. Then the cost of such captively consumed goods would form part of final product which is also under cost audit, and such separate cost audit report for captively consumed goods will not be necessary. Then it's okay. If both the goods are under cost audit, if this is also under cost audit, this is also under cost audit, no problem at all. You prepare one cost audit report, okay, one cost audit report, and both of them can be included in that cost audit report. Simple, no problem at all. There's no issue at all. But the real issue is, sir, however, if the product is partly for captive consumption and partly sold, or if the product is 100% captively consumed for production of some other product which is not covered under the rules, now this is a problem. Ultimate product is not covered under the rules, only the intermediary product is covered under the rules. Then what will happen? The cost audit would be applicable only for such captively consumed products. So yes, you have to get your cost audit done for the captively consumed products separately. So let's see, captively consumed goods, 100% captively consumed, and final goods are also covered under cost audit. No problem, no separate cost audit for captively consumed goods. There is no separate cost audit for captively consumed, no problem at all. Situation 1, no problem. Situation 2, captively consumed goods, partly captively consumed and partly sold in market. Partly you have consumed them on your own, partly you have sold in market. Separate cost audit for captively consumed goods. Yes, you are selling captively consumed goods which is already covered under cost audit. Separate cost audit is required to be done for that part of captively consumed goods. Yes, only captively consumed goods requires to be get audited. So you will prepare an audit report only for this product A. You will prepare a cost audit report, not for product B. For product A, you will prepare a cost audit report. Third situation, the captively consumed goods is 100% captively consumed. The goods is 100% captively consumed, and the final goods are not covered under cost audit. The final goods which are there are not covered under cost audit. The ultimate goods are not covered under cost audit. Then what will happen? Separate cost audit report for captively consumed. Then you will have separate cost audit report for captively consumed goods. So these are the three scenarios according to which you need to decide whether separate cost audit report is required to be prepared for the captively consumed goods or not. These are the three scenarios in which we need to decide whether the captively consumed goods also need to be audited or not. That is how the FAQ goes. Okay. If you understood the provision, please write a yes sir in the chat box. Yes. All right. Next rule is very easy rule. Rule number 5. So we have covered rule number 3. We have covered rule number 4. Now we are coming on to rule number 5. Perfect. Very important rule. Very important FAQ in fact, which has been released by the Institute of Cost Accountants of India. Yes. What is the question? Yes, very good question. Sir, whether cost records will be applicable for both or not? Answer is yes, cost records will definitely be applicable if the captively consumed goods are being used in the product which is not covered under cost audit. Then even, you know, the cost records will definitely be applicable for both the situations. Yes. Okay, next is maintenance of records. How do you maintain records? What are the various forms? Very, very important from an exam standpoint. In fact, in the last attempt, a question was asked regarding the contents of the form also. Never ever has it happened that the examiner has asked you, please tell us what is the content of forms. This time the examiner had asked you what is the content of the form, what is to be written in the form. So it is quite important, you know, to be discussed over here. So maintenance of cost records. Cost records are required to be maintained under Rule 5. There is no specific, you know, format, but it says that cost records shall be maintained on a regular basis. Regular means monthly, quarterly, half yearly, or annually. So these are the options which are given to you. You have to maintain your cost records regularly in such manner so as to facilitate calculation of. So what is the calculating, what is the ultimate aim of maintaining cost records? You have to calculate per unit cost of production or cost of operation, cost of sales, margin, which means profit margin of each of the products. So rule is saying that do not, you know, worry about the format. You can use any format, whatever format you use, we are okay with it. But we should be able to compute the per unit cost of production, the cost of sales, and the margin for each of the products. Please tell me what is that one statement which you prepare where you get all these three things. What is that one statement which you prepare in which you get all three things? And that is nothing but your cost records. Okay. So these are the forms which you use for your, you know, cost records and cost audit purposes. Okay. This is the chart. So Rule 5, maintenance of cost records to be maintained on a regular basis, monthly, quarterly, half yearly, annually, to facilitate calculation of per unit cost of production, cost of sales, margin of each of the products. These are required to be prepared. Please tell me one statement where you get all these three things. I'm still waiting for your answer. One statement where you get per unit cost of production also, where you get cost of sales also, where you get margin for each of the product also. All three are given in one statement, which you usually prepare in your syllabus, you know, group 3. What is that one statement? Yes, cost sheet. Perfect. So you prepare cost sheet and you will get per unit cost of production also, you will get cost of sales also, you get margin of each of the product also. That is your cost records. Yes, accompanying annexures should be there. Details of expenses should be there. Expenses ledgers should be there. That all should be there. But the main thing is cost sheet where you get all three. Okay, these are the 4 forms. Very, very important. Please write very, very important. You have to learn the names of the form and what are they used for. And also you have to learn that form 2 and 4 are in XBRL format. It's extensible business reporting language. It's an electronic form which is filed electronically and it is submitted electronically. So form number 2 and 4 is electronic form. Form number 1 and form number 3 is not an electronic form. It's a PDF form or a non-XBRL form. So that is how the forms are there. 4 forms are there. CRA 1, items of cost to be included in the books of accounts. CRA 2, when you appoint the cost auditor, you file CRA 2. CRA 3, cost audit report. How will you finalize the cost audit report? So please remember one very important thing. For cost records, there is no format. But for cost audit, there is a format. This is the format for cost audit. For cost records, there is no format. But for cost audit, there is a format which is given in form CRA 3. This is the format which is given in cost audit. Cost records, there is no format. Okay. Then CRA 4, submission of cost audit report to central government. When you submit the cost audit report to central government, you fill CRA 4. Now, sir, tell us one thing. When we already have CRA 3, where we are filing our cost audit report, same we can file to Government of India also. Why a separate form that says submission of cost audit report to central government? We can just file this to Government of India. Why is this required? Why is CRA 4 is required? Guys, CRA 4 is a special form where apart from cost audit report, there is a section which says that management should drop in their comments regarding qualifications which are given in the cost audit report in that form. So this form CRA 4 contains CRA 3 cost audit report and management comments on the qualifications which have been given by the auditor. Whatever negative auditor has written, the management has to explain why this negative is written and what steps have been taken to rectify this negative observation which has been written by the auditor. So that is why CRA 4 is different. This is only the report by the auditor. Audit report is further analyzed and further delved into by the management using CRA 4. So that is why CRA 4 is different, CRA 3 is absolutely different. So yes, both these forms are required to be, all the 4 forms are required to be understood by you and learned by you. Okay. So in CRA 3, there are various annexures in CRA 3. And yes, you need to learn these annexures also which are there in CRA 3. In CRA 3, there are various annexures like Part A, Part B, Part C, Part D. Part A is general information about the company, about the audit. That is general information which you need to fill in Part A. General information about the company, details of cost auditor, cost accounting policies, product services details including revenue for both manufacturing and service sector. Okay. So Part A is to be filled by both manufacturing and service sector. Then we have Part B. Under Part B, it is only applicable for manufacturing sector. Okay, and details of production, cost statement, details of material utility expenses, all these things are appearing in Part B. Part C is only for service sector. So if you are manufacturing sector, you need not fill Part C. If you are into manufacturing sector, you need not fill Part C. So Part C is the service sector portion. Details, quantity details of services, cost statement, details of material utility expenses is there. Then finally Part D. Part D is common for manufacturing and service, where your profitability, reconciliation analysis, financial position ratio analysis, IDT RECO, your GST reconciliation also comes in Part D. So Part D is applicable for both manufacturing and service sector. And yes, you have to remember these contents, guys. You have to remember these contents because in the examination, the examiner might ask, please tell us 4 things that are to be disclosed in Part B. These are the annexures to the cost audit report. Cost audit report is given in CRA 3. CRA 3 is the cost audit report, and this has got these annexures. These annexures are CRA 3 form annexures. So very important. These are to be learned by you. Okay. These are to be learned by you that these are the annexures to CRA 3. Annexures are to be attached along with the cost audit report. Details of all the requirements are required to be filled over there. Okay, sir, got it. Now, a very important advisory. Annexures to be signed by one director and a company secretary. So the annexures are to be signed by one of the directors of the company and the company secretary. Significant variances. Variances means last year the human resource cost was 2 crores. This year it is 8 crores. 4 times increase in human resource cost. You need to write the reason. Significant variances from the past years to be highlighted if duration is to be highlighted in the report. So this is the second point, that any significant variance in the numbers is to be highlighted by you in your cost audit report. So variances should be highlighted. Okay. Then the third one is third one is if duration of the cost audit report is less than 12 months, sometimes same should be indicated. So sometimes cost audit report is prepared for less than 12 months. Okay. At that point in time, this should be indicated in the cost audit report. Now, I want you to answer me, how and why will we prepare cost audit report for 9 months or for 10 months or for 4 months? Why would we do that? We always prepare audit reports for 12 months. 12 months is the standard financial year, which is acceptable in Companies Act also, Income Tax Act also. Why will we prepare cost audit report for less than 12 months? Please give me in the chat box any example, any situation where you feel that yes sir, in this situation we might require to fill our cost audit report for less than 12 months. This might be the situation. Any example that you can give me, please give in the chat box. Any reason why cost audit report can be prepared for less than 12 months? Anything that you can think of, please give me in the chat box. Newly set up companies, very good answer. Newly set up companies which have been set up during the year, or when the company is, you know, liquidating itself, or when the company is getting merged into some other company. All these are situations which call for a balance sheet which is for less than 12 months. And if balance sheet is for less than 12 months, then automatically, guys, the cost audit report is also for less than 12 months. Perfect answer. Perfect answer. Okay. So there can be several situations where the duration of cost audit can be less than 12 months, which is perfectly okay. And we need to give that note that yes, this year's cost audit report is for less than 12 months. All right. So guys, these are the forms. Very, very important. Please write very, very important on these forms. Please write very, very important on the contents of this form. That is also important. Okay, and these are the notes. Okay, this is the duration of the company. Okay, now one very important definition which has been asked in the examination several times: the normal price. What is the definition of normal price according to the cost audit? Okay, and this definition is absolutely the same as transfer pricing. Okay, you have studied transfer pricing in your group 3, where we compute a normal price of a particular transaction using any of the 5 methods, right? 5 methods are there, and the 6th method is any other method. So using this 5 methods, we compute a normal price. What should be the price for this particular transaction? Same price is used in cost audit report also, CRA 1, item number 24. Okay, so this normal price means price charged from the comparable and similar products in ordinary course of trade and commerce, where the price charge is the sole consideration of the sale, and such sale is not made to a related party. When the sale is made to an unrelated party and price is the sole consideration, then what will be the price of this particular case? Should we remember para number also for CRA 3? Yes, para number should also. Para number is not required. Only part A, B, C, para number is not required. Okay. Consideration for sale is not made to a related party. The basis adopted may be any one of these. So this definition has been asked in the questions examination. So please do it. Whether separate form CRA2 is required to be filed by the company having 2 or more different type of products. So suppose there are 2 products which are covered under table A or table B, which are subject to cost audit. Then should we have 2 different CRA2? Should we file 2 different CRA2? Answer is no. Only one CRA2 is required to be filed. Providing details of sectors, industries covered under the cost audit, and all the details are to be given in that particular one single CRA2. Both the products details are to be given in one CRA2. 2 CRA2 is not required to be prepared. For companies appointing multiple cost auditors, only one single form CRA2 is required to be filed. Provision has been made in the form to accommodate details of multiple cost auditors also. Sometimes there are multiple cost auditors which are appointed by the company. Same happens with statutory audit also. There are joint auditors. Okay. So if there are joint auditors, no problem. Only one CRA2. CRA2 cannot be 2. Can be only 1. Okay, sir. Very, very important. Appointment of cost auditor. How is cost auditor appointed? Very, very important. Cost audit including procedure for appointment of cost auditor. 6 marks question in examination, including case study based questions, can be asked from this particular rule, rule 6. Which is procedure for appointment of cost auditor. Very, very important procedure from an exam standpoint, guys. Okay. And just for your revision purposes, I have jotted down this entire procedure in this particular chart. This is a chart which tells you what is the procedure for appointment of cost auditor. Okay. We'll come back on the chart. First, we'll study it from the book itself. Sub-rule 1. Company satisfying the threshold limits, company which is falling under the threshold limit, should, through board of directors, appoint cost auditor within 180 days of commencement of the financial year. So within 180 days of commencement of the financial year, you should appoint a cost auditor through board of directors or audit committee. You should appoint a cost auditor, for getting the cost audit done. So that is sub rule 1. Okay. Now what is the timeline? Timeline is 180 days from commencement of the financial year. 180 days from the commencement of the financial year. Now please remember one thing. Okay, so if on 31st March 2025 has ended, okay, and the turnover of this particular year was rupees 200 crores, and we are preparing table B product also. Obviously cost audit is required to be done for the next year, 1st April 2025. For that year, the cost audit is required to be done. So 1st April 25 to 31st March 26, cost audit is required to be done. For this year, cost audit is required to be done. till what time should the cost auditor be appointed? 180 days from commencement of the financial year. So 2025, you add 180 days to it, and then you find the timeline for appointment of cost auditor. Now many students make a mistake in this particular aspect. So April, May, June, July, August, September. Students usually think that 30th September is the last date for appointment of cost auditor. 30th September 2025 is the last date for appointment of cost auditor. This is wrong. You have to calculate exact 180 days. And the exact 180 days will come up to 27th September 2025. It's a very, very important point to be noted. It will come by 27th September 2025. It's not 30th September 2025 because it's written 180 days from commencement of the financial year. So please remember this very, very important fact. Okay. Now, while appointing the cost auditor, his written consent is required, and he has to give 4 certificates to the company. His written consent, cost auditor's written consent is required, and he has to give very good. Manisha has already written within 27th September 25 he must be appointed. Very good, Manisha. Okay, so cost auditor must give his written consent to the appointment along with the following 4 certificates. So 4 certificates are required to be given by the cost auditor to the company. Number 1, he is not disqualified from appointment as a cost auditor. He has followed all the provisions of Cost and Works Accountants Act and the professional ethics rules and regulations he has followed. Okay, the professional ethics rules and regulations he has followed. That is the first certificate that he is required to give. It satisfied the criteria provided under 141 of the Companies Act. So whatever other disqualifications and qualifications according to the Companies Act, he has fulfilled all of them. He is satisfying all of them. The proposed appointment is within the limit laid down by the authority of Companies Act. Remember, there's a limit which is given in the Companies Act, which is limit of 20. So his cost auditor not above 20, he has to verify, give a statement of that also. List of pending proceedings against the cost auditor or audit firm with respect to professional conduct is complete and accurate. So the cost auditor has to give all the cases which are going against him with respect to fraud, with respect to any criminal or civil offenses, any cases which are running against the auditor, he has to give to the company. So why is this required? Why is company bothered what criminal proceedings are going on against the auditor? Because company wants to know which all fraud cases are going against him. Because if there's a fraud case which is proven against him, then he disqualifies from becoming an auditor. So company has to immediately ask the auditor to leave if any of the cases which are pending comes against him, because then they are not qualified to become a cost auditor. So company has to keep tab of all the cases which are going pending against the cost auditor. So this list is required to be given by the cost auditor to the company. Finally, the company must inform the cost auditor about his appointment and file a notice of such appointment with the central government. So the company will file the notice of appointment of cost auditor with the central government under form CRA 2 in XBRL format within 30 days of board meeting in which appointment has been done, or 180 days of commencement of the financial year, whichever is earlier. Now this is the time limit for filing CRA 2. This is the time limit for filing CRA 2. Now I'll give you some examples. You please tell me what will be the timeline of filing CRA 2. So I have to appoint a cost auditor for the period 1st April 2025 to 31st March 2026. This is the period for which I need to appoint a cost auditor. Okay. Now, board meeting where I have appointed that cost auditor takes place on 15th May 2025. And I have given an appointment confirmation to the cost auditor. Appointment of the cost auditor has happened. Now, this is situation A. You need to tell me till when form CRA 2 is to be filed. You have to tell me that. This is situation number 1. And I have a situation number 2. So within 180 days the appointment should be done of the cost auditor. That is perfect. But what is the timeline for filing CRA2? That is my question. Situation number 2. Board of Director meeting has happened on 15th September 2025. Board of Director have appointed the cost auditor on 15th September 2025. Within 27th September, he must be appointed. Very good. But you tell me, in these two scenarios, when should CRA2 be filed to central government? The last date of filing CRA2. What will be the last date of filing CRA2? That's what I want to know from each one of you. What is the last date of filing CRA2? Okay, let's read the rule once more. Rule says the company must inform the cost auditor upon his appointment and file notice of such appointment with central government inform CRA2 within 30 days of board meeting or 1 days of commencement of the financial year, whichever is earlier. Whichever is earlier. So now you tell me, by when should the CRA2 be filed? By when should the CRA2 be? Yes, very good. 30 days from May 15th. 30 days from May 15th. It will come out to be around 14th June 2025. Within 30 days of May 15th. So it will come out to, yes, very good. No, 13th October is the wrong answer. 13th October is the wrong answer. So this is right. So right answer for this will be 27th September 2025. Because it is written whichever is earlier. Answer to B is 27th September. Yes. The limit cannot go beyond 180 days. The limit cannot go beyond 180 days. The limit is 180 days. So Form CR2 should be filed up till latest by 27th of September. So the right answer is 27th of September in case B. In case A, the answer will be 14th of June. That's the point which we really need to understand with respect to sub-rule 2. Okay, sir, got it. Now sub-rule 3, every cost auditor appointed shall continue in such capacity till expiry of 180 days from the closure of the financial year. So till when the cost auditor remains the cost auditor? Till 180 days of closure of the financial year. So if our financial year is 25-26, then up till 180 days, 27 September 2026, the cost audit report is required to be filed. Okay. So guys, this is appointment of cost auditor. CRA2 is appointment of cost auditor. From the end of the financial year till 180 days, the cost audit report is required to be filed. You please tell me what is the form of cost audit report. What is the form of cost audit report? Form of cost audit report is CRA3. Form of cost audit report is CRA3. That is the form of the cost audit report. So the cost audit report requires to be filed up till 180 days from the closure of the financial year or till he submits his cost audit report, whichever is earlier. Okay. So if suppose the cost auditor prepares his cost audit report not on 27 September, but he prepares the cost audit report on 28th June 2026, then his appointment gets terminated on that day. He is no more the auditor now. Okay. So depends when will the auditor submit his final cost audit report. It can be 180 days from the end of the financial year, or when he submits his cost audit report for the financial year, his appointment will be cancelled. Provided that cost auditor appointed under these rules may be removed from his office before the expiry of his term through board resolution after giving reasonable opportunity of her to the cost auditor. So if suppose cost auditor is found lacking somewhere, he's found lacking in giving time to the company, he's found lacking in his duties, he is not performing his duties well, he is not performing his work well. If any of the problems is faced by the company and company thinks that yes, there is some problem with this auditor, we don't want this auditor, or some disqualification has happened after the appointment for that auditor has purchased the shares of the company. Okay. If anything of this sort has happened, then the auditor can be removed before the expiry date also, and a reasonable opportunity should be given to the cost auditor and removal should be done. Any casual vacancy. So if the auditor is, has died, has, some mishappening has happened with the auditor, or he becomes ineligible for doing the audit in any manner. So if any casual vacancy happens in the office of the cost auditor, it shall be filled by the board of directors within 30 days of occurrence of such vacancy. So within 30 days, a new form CRA2 should be filed by the company with the Ministry of Corporate Affairs, central government, for appointing the fresh auditor. Fresh auditor can be appointed in that particular case within 30 days. 3B. The cost statements, including other statements to be annexed to the cost audit report, shall be approved by the board of directors before they are signed on behalf of the board by any of the directors authorized by the board for submission to the cost auditor. So whatever annexures are being prepared. So guys, responsibility of preparing annexures is of the company. Company has to prepare the annexures. Before submitting the annexures to the auditor, the company has to sign it, has to approve it. The directors have to sign it and approve it. Sub-rule 4. Every cost auditor who conducts an audit of cost records of a company shall submit the cost audit report within 180 days along with his qualifications in form CRA 3. So 180 days is given, and within 180 days the auditor has to submit his cost audit report 180 days from the end of the financial year. He has to submit his audit report to the company. Every cost auditor shall forward his duly signed report to the board of directors within a period of 180 days from the closure of the financial year. So whenever the financial year closes, from that date, 180 days, the cost auditor shall forward his audit report. That's the ultimate timeline. Now, the company within 30 days from receipt of cost audit report. So when company receives the cost audit report, within 30 days, in form CRA 4, the company has to respond to all the qualifications which are given in the cost audit report. So if any negative comment is there in the cost audit report, the company should tell reasons of that qualification and what steps have they taken to rectify that qualification. Okay, that details has to be given by the company in CRA 4 and has to file with central government. So please understand one very important thing to be noted over here. CRA 3 is not submitted to the central government. CRA 4 is submitted to the central government, and CRA 4 includes CRA 3 as well. Please understand this point. CRA 3 is not submitted to central government. CRA 1 is not submitted to central government. CRA 2, appointment of cost auditor, is submitted to central government. CRA 4, where CRA 3 is also there and company's remarks on the qualification is also there, that is submitted to central government. And therefore, CRA 2 and CRA 4, XBRL, CRA 1, CRA 3, no XBRL. That is the reason. Why? Because government wants everything to be submitted under XBRL, whatever is submitted to the government of India. Form 1, Form 3, no XBRL because it is not submitted to government of India. Form 2 and Form 4, yes XBRL because it is submitted to government of India. So Form 4 is also submitted to government of India, XBRL format, containing full information explanation on every reservation of qualification of the cost audit report. Provide that companies which have got extension of time for holding annual general meeting. So guys, under section 96(1), generally company gets some extension of filing the annual report. So if that extension is given to the company, then CRA 4 may also be filed, in that extended period. In that extended period, the CRA 4 can also be filed, because factually what happens is cost auditor would definitely want to see the financial report before filing the cost audit report. Yes, cost audit always follows the financial audit. First financial audit gets conducted and the financial audit report is seen by the cost auditor also, and then cost auditor conducts his cost audit. So this sequence happens. So unless and until financial audit report is ready, financial audit is closed, generally cost audit cannot be closed. So if extension is given to financial audit, cost audit is also extended to that extent. Sub rule 7, the provision of subsection 12 of 143, very important. very important. We had studied in our chapter 1 also, basics also, and over here also. So the rules related to fraud, if any fraud has been unearthed, rules related to fraud, section 143(12), they are applicable for cost audit also. So if the cost auditor has found out some fraud and the fraud is above a particular threshold, then direct reporting is required to be done to the ministry. If the fraud is less than 1 crore and the fraud is less than the threshold which is given in the Companies Act, then reporting is required to be done to the board of directors. But within 2 days, the reporting is required to be done. 143 subsection 12, very important subsection of your syllabus. We have done it in our first chapter also. In first chapter in great detail we had done this particular aspect. Okay, so it's very important. It has come in June 2014, December 2016 and December 2023 also it has come. December 23 also it has come. So very, very important aspect of the rules. Okay, now we come on to section 148, subsection 6 and subsection 7. Again, important sections from an exam standpoint. So subsection 6 says that within 30 days of date of receipt of copy of cost audit report, the management shall furnish to central government with such report along with full information explanation on any reservation or qualification contained therein. So management is responsible for filing CRA 4 to central government along with the explanation to all the qualifications which have been given by the cost auditor. This is the requirement by law also. We have same requirement under the rules also. Same requirement is given under law also. Then 7. If after considering cost audit report referred to in section and information and explanation furnished by the company, the central government is of the opinion that any further information is required to be given, then that can be called for by the central government. Usually central government don't go into details of cost audit reports and the explanation of the cost audit reports. Usually they don't go, but if they go and if they want some other information from the company, they can ask the company to give the information. That is also open to the central government. Central government has got this power under subsection 7. Okay, sir, got it. So yes, this till this portion, case study based question, can come in examination. Case study based question means that these question will ask you to analyze a particular case, will give you dates, and then you will be required to analyze whether cost audit is applicable or not, cost records is applicable or not, and then they'll be asking you to tell what is the date up till when CRA 2 can be filed, CRA 2 can be filed. What is the date up till when CRA 4 can be filed? They'll ask you plethora of questions. Case study based questions will be there. Okay. If you see the back portion of this PDF, the last portion of this PDF, I have given many case studies regarding this entire concept, regarding this entire aspect. Many case studies have been discussed by me in the practice questions which are given after this PDF. Okay. Now we start 2 important practical questions that can come in your examination. Although guys, from this chapter there are other practical questions also which can come in your examination, like capital employed, like how to compute the ratios, proprietary ratio, profitability ratio, etc., etc. But they are quite simple. Okay. So for this marathon purposes, I have picked up 2 important practical question that can come in your examination, and those 2 practical questions are value addition and reconciliation statement. I feel that from these 2 aspects, questions are asked more often. Many times questions are asked from these 2 aspects, value addition and profit reconciliation statement. So let's first of all start value addition, then we will start the profit reconciliation statement. Now what do you mean by value addition? Value addition means what is the value which has been added by the company in the entire revenue process, or in the revenue of the shareholders. What is the benefit that the company has added in the entire process of manufacturing, in the entire process of converting raw materials into finished goods? What is the value addition that has been given by the company? So the employees want to know that what have been their contribution. Employees want to know that. In real language, this is known as VAPE, value addition per employee. So usually what happens is employees and the owners are always under a fighting situation. They're always under a rift. Okay. Employee will say, oh, I have contributed so much, the company is under profitability just because of me. And the owners will say that no, there is no value addition from your part. You have not value added so much. The profit is because of me. So there'll always be a fight between the owners and the employees, the employers and the employees, regarding what kind of value addition is there, and what value addition is there, and who is responsible for that value addition. Whether employees are responsible for the value addition or the employers are responsible for value addition. So there's always a fight between employers and employees with respect to value addition, because ultimately guys, employee wants bonus, employee wants increment in salary, and the employers, the owners, will try to reduce their bonus, will try to reduce their salaries, will not want to give away the entire earning of the company to them as salaries or bonus. They will try to retain them. They will try to retain the earnings and salary. Employees will try to do that. So yes, to end this rift, there is a concept of VAPE which is introduced in industry, and many industries use this concept guys. VAPE, value added per employee. What is the contribution per employee is giving to the company? What is the contribution per employee is giving to the company, and then they will compare VAPE with the salary. Okay, so if suppose VAPE comes out to rupees 6 lakhs per employee is giving a contribution of 6 lakhs to the company. Okay, VAPE is coming out to 6 lakhs and the employee's salary is 4 lakhs. Then company will try to increase the salary because value addition done by employee is 6 lakhs. Employee's salary is 4 lakhs. Then company will try to increase the salary of the employee. Of course, entire value addition cannot be given away to the employees. No, entire cannot be given away. But at least some can be shared. Out of 2 lakh, at least 75,000 can be shared with the employees. That's the idea. That is the background behind computing VAPE or value addition per employee. So what is value added? Value added is the amount by which value of an article is increased at the stage of its production, exclusive of its initial cost. So initial cost, which is the capital contribution and the depreciation thereon, are not included because that is in any ways employer's responsibility. Employees is not concerned with that particular aspect. Okay, capital contribution, the fixed asset which have been purchased, employee is not bothered about them. So initial cost is to be ignored. It is the difference between price of product and the cost of producing it. The term value addition may be defined as difference between net output value, that is sales, and the cost of bought out material and services. So the employee is bothered about what sales have they achieved minus what is the cost of production. That's it. Okay. So this is always based on audited financial statements. So the value added is always computed based on audited financial statements. So the formula is revenue from operations excluding sales return less any taxes and other duties, if any, they are to be reduced because they are refundable and they are paid to Government of India. Net revenue from operations, add export incentives, if any, and we adjust the stocks like cost of bought in inputs. Stocks can be adjusted, cost of bought out inputs, material, processing, consumption of store spare, utility, others can be reduced from the computation of value added. Now, 3 things which are not reduced. Okay, 3 things which are not reduced. Salaries and wages is not reduced. Of course, guys, salaries and wages are the comparable portion. We need to compare them value added with salary and wages. If we reduce salary and wages, how will we compare it? So salaries and wages are not reduced. Interest is not reduced. Interest is a financial charge. It's not a production charge. It doesn't gets covered under the cost of production according to costing principles. Okay, so it's not a cost of production, it's a financial charge. It's because employer is not able to arrange funds of its own, that's why we have taken interest. Production has not necessitated interest. Okay, so that is not reduced. Depreciation is an initial cost, therefore not reduced, and rates and taxes is a statutory cost. It is not related to production, that's why it is not reduced. So these 4 items are not reduced while calculating the value added. Rest all the items are reduced while calculating the value added. Now let us start one question, okay, and then we will see. Now we will be able to understand the concept also better, guys, if we start this particular question. All right, let's start illustration number 1. Following figures are extracted from cost accounting records of Adrija, a single product manufacturing company. Gross sales are given to you 2025-2026. Then GST numbers are given to you, other income is given to you, increase in value of finished stock. There's an increase in value of finished goods that is given to you, raw material consumed is given to you, direct wages, salaries, bonus, gratuity is given to you, power and fuel is given to you, stores and spares, cess and local taxes, other manufacturing overheads is given to you, administrative fees, audit fees, salary, commission to directors, other overheads, salaries, wages, packing, forwarding, other overheads, total depreciation is given to you, interest charge is given to you, interest, okay. These are the interest charge. Then provision for taxes, provision for dividends. These are 2 things which are given to you. Now you are required to calculate the following ratios as per para D, para 4. Please remember this, okay. For value addition, you should remember this. It's important. You have to compute the value addition. You have to compute the earnings available for distribution to the stakeholders, and then you have to compute what is the distribution of funding to different claimants. And you yourself see for how many times has this question recurred in your examination. And guys, in the practice questions, I have given plethora of other questions on value addition. You have to, do all those questions by yourself because those questions are very, very important. Very, very important questions. All the questions are required to be completed by you. Okay, so let's start illustration number 1. So first we are going to compute the value addition. Computation of value addition for Adrija Limited for March 26 and March 25. All right, sir. I think, I think this should be 2026 and this should be 2025. Just interchange in your PDF also if it is different. If it is not different, then it's okay. If it is not different, then it's okay, because I'll be changing it in the PDF, which I'll share it with you. Okay, let's start with gross sales. So we have been given gross sales, including GST we've been given, okay, including GST, 2600 2080. Including GST 2600 2080. We are going to reduce the GST from it. GST amount is 200 and 160. Taxes are not required to be included, so taxes will be excluded. Then the net sales come out to be 2400 and 2020 minus 160. $1920. Then now we are going to exclude the expenses which are given in the question. Sir, other income will be included or not? No, other income will not be included, because other income is not attributable to the employees. Employees have not contributed in earning other income. So other income will not be added. No, other income will not be added. Other income is given, although in the question it will not be added. Okay, sir. Next, increase in value of finished stock. Yes, this will be added, because this is contributed by the employees. Employees have contributed it. It is to be added. 10 and 5. 10 and 5. Now we're going to reduce the cost of bought out items. Number one is raw material, 880, 720. 880, 720. Power and fuel, 120, 96. Stores and spares, 80, 70. Direct wages, salaries, bonus, gratuity is also there. No, sir. Not to be reduced. Not to be reduced. Not to be reduced. Power fuel we have reduced. Stores and spares we have reduced. Cess and local taxes. No, not to be reduced. Cess and local taxes not to be reduced. Yes, sir. Other manufacturing overheads. Yes, this is to be reduced. 215. 185. Then administration overheads. Administration overheads. Audit fee, yes, to be reduced. It is very much an expense, overheads expense, which is related to again production, because production cannot happen if audit doesn't happen. Then we have salaries and commission to directors. No, sir, not to be reduced. You have to compute value addition, compare it with the salary, so salary is not to be reduced. Other overheads, yes, to be reduced. 130, 110. Then selling and distribution. Salary, wages, again not to be reduced. Packing and forwarding, yes, to be reduced. 10, 8. Other overheads to be reduced. 125, 100. 125, 100. Total depreciation not to be reduced. It is an initial cost. Initial cost is not to be reduced. Total depreciation is not to be reduced. Okay, sir. Then finally we come at interest charge. Now this is a tricky one. Please pay attention now. This is a tricky one. Interest charge. Interest charged. Although we have seen that in our value addition definition, we had seen that interest income is not to be reduced while computing the value addition. Okay, but there's a difference, and you should read this topic, which I have given in great detail in the book itself. I'll explain this topic in brief to all of you. You read it on your own. Okay, please see. There are three types of interest which are there in the question. Three types of interest: working capital interest, fixed loan, and debentures. Fixed loan and debentures are used for long-term assets, but working capital is used for our day-to-day production. So the treatment is, if it is a working capital loan, since it's used for our day-to-day production, it's a production cost. However, long-term loan interest, long-term debt interest, it is not used for day-to-day production. It is not our usual, working capital kind of a cost. It's a long-term cost. Therefore, it is not included in calculating the value addition. Very, very important point to be noted over here. Interest on working capital is to be reduced while calculating the, value addition. Only interest on working capital is to be reduced while calculating the value addition. Interest on working capital. 30 and 25, this is to be reduced. 30 is to be reduced, 25 is to be reduced. And at your home, please read this paragraph. At your home, please read this paragraph by yourself. You will be able to understand more. This is an important paragraph which I have written on working capital interest. Please read it. Okay, sir, got it. So 30 and 25 is to be reduced. 30 and 25 is to be reduced. Now, please tell me, what is the total of cost of bought out items? What is the total of this cost? Okay, and what is the value addition? 802,596. The small things in every practical question that you need to take care of. Very small minute things are there in computation of value addition and things like that, which you definitely need to take care of. This is one of that minute things, that interest on working capital is required to be reduced. Okay, if you understood the entire question, please say yes, sir. Perfect. Very, very important question from an exam standpoint, value addition. Now, we have to compute now the earnings available for distribution. What are the earnings which are available for distribution to everyone, like shareholders, like employees, everyone, okay? It is not only value addition, 802, but also the other income. Other income will include 150 and 100. 150 and 100. This is available for further distribution. So 952 696 is available for distribution. 952, 696 is available for distribution. Now, who are the different claimants? First claimant is the employee, right? Employee will ask for his salary. So we're going to add all the employee related cost over here. All the employee related cost. Which means we'll add this. This is first thing that we are going to add. Then we are going to add this. This is the second thing that we are going to add. This is the third thing that we are going to add. These are the three things that we are going to add for employees, salary and bonus and whatnot. Okay. This comes out to 262 and 211. 262 and 211. This is the calculation for 262. This is the calculation for 211. Then Government of India, there is a provision for taxes and rates and taxes which we need to pay to Government of India. So 158 is to be paid to Government of India. 100, 60, 50. Then we have our liability for the shareholder, the lenders. In the value of finished goods will not be considered in A and B. We just add it at the end, sir. I did not understand your question. What is the question? In the value of finished goods. This stock of finished goods. Where are we going to add it? In value of finished goods will not be considered in A and B. What is A and B? What is A and B? We just add it at end, sir. I did not understand your question. Manisha, please rephrase your question. I did not understand your question. Okay, lenders. For lenders, we have interest obligation for IDBI Bank and debenture holders. 4535 it is. And 1515. Okay. Then for shareholders, we have proposed dividends. 210 for 2026, 115. This is the residuary figure, this is the balancing figure. Now is the balancing figure. So the balancing figure should come out to 202,170. Okay, so this is your answer. So yes, validation is an important aspect of your syllabus, guys. You really need to complete value addition very well. You need to do all the questions which I have given at the end of your at the end of your book. Also I've given at the end of your chapter, I've given many questions of value addition. Please do all those questions. They are very, very important. Now we start our next topic, and the next topic is profit reconciliation statement. Very, very important. In every attempt, yes, in every attempt, this question is coming regularly. 7 marks question coming regularly. Do as much practice as possible. Do as much questions as possible of this particular topic. In the last attempt also, there are many good adjustments which have come in from this particular topic. All your practice will enhance your capability of doing this question. This question you cannot go wrong. You cannot go wrong in this question. You cannot go wrong in this question. This question should be correct. At any cost, this question should be correct. Simple. So do as much practice as possible. Do as much questions as possible. You have plethora of ways to practice questions. You have plethora of sources for practicing this question. Please practice this question as much as you can. as much questions as you can. Okay, simple. We have to reconcile the profits of financial profit versus costing profit. Okay, reconciliation of profit, financial books as compared to costing books. Okay, very simple method that I have taught you in the class. Simple method that I have taught you in the class. I am using the same method. Okay, so on one of your hands, and do it with me. Come on, do it with me. Search for a sketch pen. Search for a sketch pen from your drawer. Bring a sketch pen from your drawer, and in one of the hands just write F. In one of the hands please write F. Like this. Write F in one of the hands. In one of the hands write F. Any one of the hands, either left or right. You write F in one of the hands, okay? And in the other hand write C. Write C in the other hand. On the other hand, please write C. F C. F C. If you have written, please say a yes in the chat box. Please say a yes in the chat box if you have written. And using this method, you can solve any question of profit reconciliation statement. Any question. It's the most easiest method of doing the profit reconciliation statement. We'll do this question in class, and I'll demonstrate how you use this technique. It's a very simple technique. But please confirm in the chat box. Have you written F in one of your hand? Have you written C in another hand? Okay, now let's start the question, and I'll tell you how to use your hands. Okay, the financial profit of company Panwood Limited is manufacturing company for the year is 1,15,71,480. So the company has given its financial profit. Okay, financial profit is given to us. So this is what? This is financial profit. Finance books of accounts. Okay, profit and loss account. This is financial profit. During the course of cost audit, it was noticed the following. So these are the adjustments which we need to do. These are the adjustments which we need to do. You are required to prepare reconciliation statement between two accounts and work out profit as per cost account. We need to find the costing profit. Okay. So this has been given to us. This has been given to us. Financial profit is given to us. We have to compute the costing profit. Financial profit is given to us. We have to compute the costing profit. Okay. So we will start with figure of financial profit. Profit as per financial account. We will start with that figure. 115,71408. 115,71408. This is profit as per financial accounts. We will start with figure of financial account 115,71408. Now we are going to add some things. We are going to reduce some things. Okay. Both of things are required to be adjusted. Now we'll see one by one which is to be added, which is to be reduced. We'll see that. Now please remember the first principle of computing the reconciliation statement. The first principle is the thing which is taken as a base, this freezes. The thing which is taken as a base, this is variable. This changes. Okay. And the thing which we need to compute, that is cost audit, this freezes. Which means what? I'll tell you what. The profit which is taken as base is financial profit. Okay. This is the financial profit. So this is a balance. This is like a tarazu. This is a balance. We need to keep both of them equal. Whenever they are unequal, we need to shake our hands. Which one is taken as the base, that we need to increase or decrease. The other hand will remain freezed. So costing profit will remain freeze. We will not change this hand. We will only change this hand. Whatever addition subtraction needs to be done, it's done with your financial profit hand, because the base is financial profit. Now we can do changes in the financial profit itself. So we will change the financial profit hand. So this hand, financial profit, changes. Costing profit hand remains fixed. That is the principle. Okay, let's start first adjustment. First adjustment is, some discarded asset is sold off which fetched a profit of 95,000 rupees. So yes, there's a discarded assets which are sold off and they have fetched an income of 95,000 rupees. So this is an additional income according to financial accounts. This income would not have been there in the costing accounts. Costing accounts, this kind of income is not recognized. This income is never recognized in costing accounts. This is always recognized in financial accounts. Okay, so what will happen is, my financial account is more, costing account profit is less. Because the income is recognized in financial accounts, my financial account profit is more, costing account profit is less. Okay, now there's a disbalance. So now I have to either increase the costing account profit or decrease the financial account profit. Now I have already told you, this hand cannot move. It has freezed. It is made of stone. It is freezed. This hand has freezed. What will move? Only financial account hand will move. So we are going to reduce the financial profit by that amount to equate both these things. So the treatment is less this amount. This amount will be reduced from financial profit. That is the treatment. So we are going to reduce the 95,000 rupees. So less 95,000 rupees. In examination, you cannot take 1 hour to decide whether to less or add. You have to be very quick. So this method is very quickly telling you whether to reduce or add. Okay, sir. So financial profit hand moves, costing profit hand remains fixed. Financial profit hand moves. Okay, sir. Next, interest was received amounting to rupees 1,05,000 from outside the business investment. Okay, so there has been some business investment. We have received interest amounting to 1,05,000 from outside the business investment. So there's some other income which has been earned to us. We have earned some income from outside the business. Obviously such income is recognized in the financial profit. It is never recognized in the costing profit. So in this case also, financial profit is more, costing profit is less. Financial profit is more, costing profit is less. Then you tell me, add or less? Less. Financial profit hand will move, less. It will be less. 1,05,000 will be reduced. $1,05,000 will be reduced. Interest received from other investment. Next, voluntary retirement payment of 3,80,000 was not included in the cost accounts. So we have made some voluntary retirement to our employees, and this payment was by mistake not recorded in the cost accounts. Again, cost expense not recorded in cost accounts, which means costing profit is more, financial profit is less. Please understand, it's in the nature of expense. Expense not recorded in cost accounts. So costing profit is more, financial profit is less. This is the situation. This is the situation. Costing profit is more, financial profit is less. Right? We need to equate it. Should I reduce the costing profit? No. Costing profit hand is freeze. It cannot be moved. So what should I do? Add financial profit. We need to add this amount in financial profit. Okay. So this treatment will be add. Amount is 3,80,000. Add voluntary retirement payment. This should be added. 3,80,000. This is a very easy method, guys. You can just keep it like this, do like this. In the examination also you can do like this. It's a very easy method of ascertaining whether add or less. Okay. Do you find it easy? Please write in the chat box. Next. Some renovation work was carried out at cost of 6,20,000 and its useful life was only 5 years. Now this is a tricky one. There's an assumption also in this particular part. That assumption is also required to be understood by you. There's a very important assumption. Okay. So this is the renovation work, capital expenditure which has taken place, 3,20,000. its useful life was 5 years. Its useful life was 5 years. So there's the assumption that in the financial accounts, you have written it off completely. 6,20,000 has been written off completely in the financial accounts. That's an assumption. Although it's not given in the question, but there's an implicit assumption that by mistake, in your cost accounts, you have written it off completely. Completely you have reduced from your financial accounts. However, the reduction should have been only 1/5 of the amount. So, your financial accounts are reduced. Your financial profit is reduced. Your financial profit is very less. Your costing profit is high. So, what are we going to do? Add financial profit, 4/5 of the amount. We will add financial profit, 4/5 of the amount. Because the amount which was required to be reduced was only 1/5. And you have reduced entire amount. So, we will add 4/5 to equate it to costing profit. So 4/5 of this 6,20,000 will be added. 4/5 of renovation expense amortized. 6,20,000 multiply by 4 divided by 5. Next adjustment is donation of 1,20,000 towards CSR commitment was not considered in the cost accounts. So there was a donation, CSR commitment. Okay, it reduced my financial profit. Financial profit was less, but in costing account it was not undertaken. So obviously what I'm going to do is add that amount. Add this donation amount. 1,20,000 will be added. 1,20,000 added. Next, insurance claim of 18,05,000 relating to previous year received during the year. So there was an insurance claim which was for the previous year loss. It has been received during the current year. So obviously my financial profit would be more, cost accounting will be less, because in costing profit we don't consider insurance claim which is received. So financial profit is more, costing profit is less. What are we going to do? Less, reduce. Only financial hand is variable. 18,05,000. 18,05,000. Next, loss on sale of investments amount to 32,800. So there is a loss which has been incurred on sale of investments. Of course, financial profit would be less, costing profit will be high, because loss on sale of investment is always recognized only in financial profit. Financial profit is less because it's an expense. Financial profit is less. So we're going to add the financial profit. Add financial profit. 32,800. 32,800. Next, the closing inventory of raw material was undervalued 30,600 and that of finished goods was overvalued in the financial records. Very, very important. Please mark it as very, very important. Most of the students get this wrong. They are confused in this adjustment and they are not able to understand what is this adjustment and they just get it wrong. Okay. So first of all, you need to understand one very important fact. Closing stock comes on credit side of your profit and loss account and therefore it is in the nature of income. Opening stock comes on debit side of your profit and loss account and therefore it is in the nature of expense. Closing stock comes in the credit side of your profit and loss account, therefore it is in the nature of income. Opening stock comes in debit side of your profit and loss account, therefore it is in the nature of expense. Please remember this thing very, very carefully while solving this. Closing stock, income. Opening stock, expense. Remember the nature. Mark up the nature. Now let us come to the adjustment. The closing inventory. Oh, closing means income was undervalued rupees 30,600 in the financial records. So income was less in the financial records. Income, closing raw material, was undervalued, means it was less in the financial records. Oh, income was less in the financial records. So this is the situation. Financial profit is less, costing profit is more. Income was less, undervalued. It's written undervalued. Income was less in the financial records. Tell me, add or less? Add. It will be added, right? So 30,600 will be added. Okay, in this particular question, they have done an adjustment. They have done a set off. So we can also do the set off, guys. Okay, that is also possible. You can also write both of them separately. That is also possible. Both the treatments can be done by you. Okay. Okay, so we are going to add this treatment to financial profit. This is required to be added. So 30,600 required to be added in the financial profit. We can write over here. Let's see the other adjustment. Next is the closing inventory of finished goods. The closing inventory of finished goods, again in the nature of income. Income was overvalued by 2,30,000. Again in this case, the finished goods were overvalued by 2,30,000, which means there was an overvaluation, means income was more in financial records. So situation is this. Income was more in financial records. So situation is this. Financial profit is more, costing profit is less. This is the situation. What are we going to do? Less. This amount is required to be reduced. So this amount is required to be added and this amount is required to be reduced. If we net off both of them, then 230,700 minus 30600, the net figure comes out to 200,100. This is required to be reduced from the financial profit. We are doing set off. Okay, this amount is required to be reduced, this amount is required to be added. So net we need to reduce 20100. So we're going to set off both the adjustment and write one adjustment which is reduced over here. So in the bracket we can write 230,700 minus 30600 comes out to 200,100. 200,100. Now what you can do is add up all the negatives, add up all the positives and find the ultimate answer. Is there any other adjustment which is left? Please see that. Is there any other adjustment? Oh yes, two more adjustments are written. Two more adjustments are there. But before coming on to the next adjustment, please confirm whether inventory adjustment is clear to you or not. Could you understand the inventory adjustment or not? Because it's very, very important. Inventory adjustment is very, very important, and how to proceed with the inventory adjustment, that is also very, very important. Perfect. Very important how the inventory adjustment is to be given. And use this method, guys. Use this method. This method is very, very easy. Okay. Next is post-retirement medical grant given to 2,20,000 not considered. Again, expense in the financial account. So financial profit is less. We need to add it. 2,80,000 add. Okay. Next. Profit from retail trading activity amounting to 1,90,000. Retail trading never goes in cost audit because cost audit is only for manufacturing. Okay. So this profit is in financial records. So financial profit is more. So we need to reduce this amount. 1,90,000 reduce. Now you tell me the total of both adds and lesses. Tell me total of additions. Total of additions, please tell me. This is the total of additions and total of subtractions. And what is the profit as per cost accounts? Perfect. This is the answer. You can write the conclusion also. As per the reconciliation statement, the cost accounting records profit is computed as rupees 10493180. You can write the ultimate conclusion also. Yes, very good. Perfect. Very good answer. Perfect. Okay, so this was the profit reconciliation statement. Again, very, very important from an exam standpoint. And in the practice questions, I have given many questions with respect to reconciliation because I know it's so important. So please do all the questions which are there in the practice questions. Okay, if reconciliation is clear to you, please write yes, sir. If you are clear with reconciliation, please comment yes, sir. Good. Yes. All right. Now, two small theoretical questions which have not come in your examination ever, which have never occurred in your past examination, but I feel that from this particular chapter, these two questions are very, very important. Guys, recently, inventory valuation powers have been given to the cost accountants under section 142(2)(a). 142(2)(a) of the Income Tax Act 1961 is a section for special audit. This requires any chartered accountant to conduct a special audit on behalf of the income tax department of any client. Okay. So under this section, chartered accountants are required to conduct the special audit of the client, and the inventory valuation can be done by the cost accountants. Inventory valuation power has been given to the cost accountants. So whatever inventory is to be valued, that can be valued by the cost accountants. So cost accountants will first value the inventory, give their report to the chartered accountant. Chartered accountant will conduct the entire audit, incorporate the report of cost accountant and give it to the Government of India Income Tax Department. That is why this newly inserted provision is really important from an exam standpoint. During assessment proceeding, assessing officer may direct to get the books of accounts of the assessee and inventory valued by the cost accountant with previous approval of principal chief commissioner or commissioner, applicable to all the assessees including companies in respect from whom assessing officer gives direction for special audit. Okay. So if the special audit is directed, then this inventory valuation can be done by the cost auditor. Form of report, Form 6D has been prescribed under Rule 14A of the Income Tax Act. Okay. What can be the fees? Fee can be somewhere between 3750 to 7500 per hour. This is recommended by the Institute of Cost Accountants. So this is just a recommendation. Okay. So CCIT to ensure that remuneration is commensurate with quality of the report. So CCIT can commensurate it with the quality of the report, but can be around this range. Okay. Then very important, CARO. So CARO is a audit report which is to be filed by the statutory auditors, and there's a mention of cost audit also in that report, and you should be aware about that mention. Okay. So maintenance of cost records, clause 3(6), where maintenance of cost records has been specified by the central government under section 148(1). Whether such accounts and records have been made and maintained, this fact is to be certified by statutory auditor in the CARO report to be annexed with the financial audit report. So you should be aware that there's a CARO report which is to be filed by the financial auditor, and they have to certify, they have to verify that yes, the cost records have been clearly maintained or not. And who's going to do that verification? Cost accountants are going to do that verification whether cost records are appropriately maintained or not. So there's a provision in CARO also which requires the auditors to comment on this aspect, whether the cost records are being prepared and filed properly or not. So this, just for your information, theoretical point of view, these two aspects are relevant because examiner can ask you about these two aspects in the examination. Okay. So yes, that's all for this particular session, guys.